Good morning, everybody. Welcome back to another episode of the Market Open. I am sorry I'm late. We were having a couple technical difficulties, but we are live. We are here, and it's time to start the show. All right, so it's an ugly day. It is an ugly day that is continuing to be ugly from yesterday. Now, yesterday was pretty ugly. I think all of us kind of expected a bit more pain because there wasn't really that much of good news yesterday. Definitely wasn't good news after hours. There was no kind of core near-term catalyst that you could expect to have a sort of reversal or any meaningful reason for why the pre-markets would go green. And that's what we're seeing. S&P 500 down another 1% in the pre-markets, but the S&P is not even really the story. I mean, that's ugly. The real story this morning is Bitcoin. The amount of liquidations, margin calls, forced deleveraging that has been happening over the past 24 hours, I would imagine is pretty intense. We're going to get some numbers soon on exactly how bad it is. $1.1 trillion in the past month has been liquidated from crypto's market cap. And obviously Bitcoin breaking some of these core levels down below 95,000 is not pretty. And it's not good for any of the crypto derivative plays like a MicroStrategy, Coinbase, Robinhood, etc. MicroStrategy right here, by the way, down at 196.77, down 5%. There is a rumor going on that I do not believe is true, but nonetheless, it is getting a lot of headlines that Saylor sold some Bitcoin. I think this is absolutely false. I believe that MicroStrategy is transferring Bitcoin into a different custodian, and that has been disclosed, and therefore people are saying that the transfer of that means it's a sell. I do not think that's the case, but that probably is contributing, that rumor in and of itself, to more people selling MicroStrategy, because as soon as you say, oh, Saylor's selling, then I'm going to sell, that's probably leading to a little bit more pain right there. But MicroStrategy down about 5.5% after being down 7% yesterday. Meta below 600, down 2%. ASTS down 4, Nebius down 7, CoreWeave down 6, Iren down 9, CrowdStrike down 2, Oracle down to 211, 350 to 211. That one's disgusting. Tesla was 445 2 days ago. Tesla is now 383. Robinhood, which was 140 a couple days ago, 114 on Robinhood. That's down 5%. Palantir losing 172, now at 165. NVIDIA is actually, NVIDIA is down 3%, which is ugly, but NVIDIA is holding 180s, which I am surprised about given it was testing these levels yesterday and the fact that it's actually holding it. Not the worst in the world. They did get a couple of upgrades this morning that we'll talk about that are, more endemic of how NVIDIA's earnings are going to go in Q3, which is the next big catalyst for November 19th. But it's obviously an ugly market. It's an ugly, ugly market, and you're seeing a lot of pain across the board as that ugliness continues. So why is this happening, and kind of what am I thinking about today for how this ends up playing out? So I think we got to go back to Friday. And again, good morning. Thank you, everybody, for being here. And we are going to get started with this show and see what we've got going on. I think this goes back to Friday. What happened on Friday? Friday, we obviously had a very, very ugly 661 level on the S&P 500. We're at 665. And so we're very close to that level, right? We reversed from 661 to 672 last Friday, because of one headline. And that headline was the shutdown. The shutdown's over. The government is reopened. And we are almost testing the same levels that we were at last Friday when we did a full literal V-shaped reversal. Why is that happening? Well, I think there's three reasons. Number one is the no data transparency from October. We talked about that yesterday, not getting any CPI or job numbers. Even if they were bad, I think it'd be better to get those numbers versus not get those numbers. Two is crypto deleveraging. That's probably having a problem in the entire ecosystem around risk on assets. And then three is this AI CapEx trade fears. I think the number one question to ask for yourself, especially if you're kind of trying to make a proclamation on if you sell, hold, buy, or navigate your portfolio in any way, hedge, sell calls, etc., is do you think these problems are structural, or do you think these problems are idiosyncratic? And I think an example is crypto deleveraging. Is that a structural problem in the economy or in crypto? Not really. We've seen crypto deleveraging happen all the time. And when it happens, you get a flush out, you get, people that liquidate and they lose a lot of money, either long or short. And then crypto goes back to being crypto because there's a reason people want to bid up that market. So that to me is rather idiosyncratic. It can be an ugly deleveraging cycle, but that's not a structural reason why I think the economy would get hit. AI CapEx trade fears. You're either a bull or bear on the overall AI trade. I tend to be more bullish. So to me, and we're going to look at some of the NVIDIA upgrades that came out this morning. You got Morgan Stanley saying, we think they're going to have a hell of a quarter. They're going to beat analyst expectations by a lot. We have to raise our estimates by $70 to $80 billion overall for the business. And we are upgrading our price to, I think, around 220. There was another firm that did 265. simply because they think the demand is massively outstripping the supply, which is good for all the neoclouds. It's good for all the hyperscalers. It's obviously good for the AMDs, Oracles, Broadcoms, etc. Or you think all of it's BS and AI capex is not real, and therefore the market has a structural problem because there was never a reason for the markets to get these valuations in the first place, right? That's a subjective decision that everyone has to make. Crypto deleveraging to me is more idiosyncratic than structural. AI capex trade, that is either you believe it's structural or you believe it's not, and people have to make their own decision there. The no data transparency from October, that is where this can begin to be structural if we're being honest. And what do I mean by that? Well, we don't have the data. We don't know how many jobs we got in October or we lost in October. We have third-party pieces of data, but nothing from the Bureau of Labor Statistics. If that data is bad and that data continues to be bad, which could be the reason that they're not releasing it, that could create a structural reason for why you think the markets can continue to sell off. Now, having said that, the data could be bad and the market could price it in and say, okay, we're not going to use this data as a reason for why we're going to continue to sell off. And, they outweigh something else that allows the market to continue going higher. But I think that out of the three, out of the AI capex trade, out of crypto deleveraging, that lack of data or the potential downside to that data, aka the data being so horrendous that the markets just can't handle it, that could be structural. Is it idiosyncratic? We don't know. I mean, we don't have the data, so time will tell there. But that is what I think the market's struggling with. And the question for today is, what headline can actually reverse everything like we reversed on Friday? Someone says Trump will step in. Well, here's the question. Will Trump actually step in today if he thinks it gets bad enough? I mean, if we fall to S&P 650, which, let's just do the math real quick. S&P 661 would be Friday numbers. Basically a 2% down day, which it was basically a 2% down day yesterday, right? So a 2% down day again would be 650. The question then becomes, does Trump think that's enough? That would be almost 6% down from the highs. Is that enough to step in and say something? I don't know. Maybe it is, maybe it's not. Maybe we never get to those levels. On Friday, obviously, the shutdown headline was the reason why we reversed. Is there going to be a need for a reason to reverse, or will the reversal happen in and of itself because people step in and say these numbers are starting to look really stupid with valuations getting very attractive, money that's on the sidelines, 7.54 trillion. Do they finally step in on a day like this, or does Trump step in and say something? And if he does step in, what can he say? I don't really know if he can say much. The only thing I'm guessing that he can possibly say is something around tariffs. And this right here is, I think, the most damning story of the week, quite frankly. Democrat or Republican, I think when you put two and two together, you have to acknowledge this. The New York Times reported yesterday that the U.S. is preparing some tariff exemptions to lower food prices, including beef and citrus products. This is the Trump administration literally admitting that tariffs are increasing food prices. I mean, if there's another way to make sense of this, then please let me know. But you got a lot of people right now saying, wait a second, I thought the tariffs weren't supposed to increase prices. I think also you've got the market saying, oh, really? So now we have to decrease tariffs. The market never liked tariffs in the first place. Remember, the only reason we had that April 10th rebound, intraday S&P 10% move, is because Trump said he's not going to impose the reciprocal tariffs that he said he would do. He took away the tariffs in order to get the markets to recover. This is kind of what's happening right now. And so I don't know the extent of how bad this is going to be, but you've had many interviews over the past couple of days by Besant, Hassett, Trump himself, what's his name? JD Vance, about the idea of affordability. And the core argument they've made is that, hey, we need to become more affordable. And the way to become more affordable technically could be, to an extent, reducing some of the tariffs. You've got JD Vance right here yesterday admitting the idea that the country is unaffordable. And as a result, maybe that's one thing Trump could say that could get the market to be on board. Also, this is Trump admitting that inflation is going higher, which the market is concerned about. Why is the market concerned about inflation? Well, the Fed said we're not going to, well, I mean, they didn't say this, but they're basically implying that they're not going to cut rates in December because of the fear of inflation. So Trump reducing some tariff exemptions on food potentially could be getting grocery prices down, which theoretically could help decrease inflation. I mean, there's a lot other tariffs that are out there, so he would have to have a more dramatic impact to get the Fed on board. But that could be something that gets the market to say, oh, Trump's reversing. That's bullish. We should buy stocks because tariffs are going away, inflation expectations going down, rate cuts back on the table, which I could see playing out. The question is, how bad does it have to get for Trump to literally explicitly say, I'm reducing the tariffs? I don't know. And we would have to see kind of how that plays out today.
I know that there are a lot of people out there, Sean, who are saying things are expensive. And we have to remember they're expensive because we inherited this terrible inflation crisis from the Biden administration. But you've already seen signs that things are getting better. The price of eggs has gone way down. The price of energy has gone way down. The price of gasoline has gone way down. And as we know, when the price of energy goes down, that starts to filter out into the entire economy, but that also takes a little bit of time. There's another component of this, Sean, which to me is maybe the most important because I care so much about our young people being able to afford a good life. A lot of young people are saying housing is way too expensive. Why is that? Because we flooded the country with 30 million illegal immigrants who are taking houses that ought by right go to American citizens. And at the same time, we weren't building enough new houses to begin with, even for the population that we had. So what we're doing is trying to make it easier to build houses, trying to make it easier to build factories and things like that so that people have good jobs. We're also getting...
The most important thing about that interview clip is that JD Vance is talking about affordability. The New York Times article last night, by the way, that New York Times article came out at 6:05 about the Trump administration potentially taking away tariffs, which would be an entire argument around affordability, right, to decrease food prices. The markets actually were up. If you saw your portfolio at 6:05, as soon as that headline came out, things started reversing like very nicely, and then Bitcoin crashed in the night, and then everything got hit. But like the market obviously was reacting positively towards that news. So for those saying Trump could step in today, which by the way, again, the S&P 500 is, you know, he stepped in at 4,800. I mean, we're at 665. I don't know if we're getting anywhere near those levels today. Maybe if it's another 2% day, we get to 650. But I don't know what would cause Trump to step in. My only speculation is that if he does step in, it would be an argument around tariff reductions, leading to the affordability argument, which would lead to the market to be happy about inflation expectations going down. Other than that, I don't know what he would say. And by the way, Trump has not taken questions over the past couple of days. Obviously, I think everyone has seen the Epstein files or the Epstein emails have been released, and it's not looking pretty. I mean, there's a reason he's likely not taking questions right now. There's been multiple reports of him being in the Situation Room, trying to figure out how to navigate this from a PR perspective. So you might just have a silent Trump for a few days until the administration figures out what they're doing with this situation. And that could also lead to a lack of him like publicly acknowledging or saying anything. 53% chance for a rate cut in December. I really do think this is the number one reason we have been seeing the sell-off over the past week. I know people want to say the AI trade is blowing up. I just don't agree with that. Steve, Chris, Dougie, and Austin, we did a podcast on Steve's stream last night. I do recommend people watching. The latter half of that show was pretty much discussing this idea around, hey, like what happens if GPU chip demand goes to zero? Like, what are the implications of everything going on? And like the core takeaway is, let's say chip demand were to go to zero tomorrow. Okay, NVIDIA and AMD, Broadcom, all those names would suffer. The neoclouds would suffer, yada, yada. But the big tech companies would just have massive amounts of CapEx going back into free cash flow, buying back their stock. I mean, those companies would do phenomenally well. In the dot-com bubble, that wasn't the case. First of all, the Fed was hiking in the dot-com bubble. So people comparing that to the macro cycle right now, when we're about to go into an easing mode, doesn't really make much sense. Number two, you didn't have companies having the types of free cash flows that a Google, Amazon, Meta has, that if they were to stop spending on this massive capital expenditures, it would just go back into the business, which would be bullish for those stocks, even if it's bearish for chips. That's the worst case scenario. The base case scenario is that chip demand does not go to zero. And we're seeing a lot of reasons why it's not going to zero, aka NVIDIA and AMD earnings and analyst estimates. And as a result, if the cloud businesses on all these hyperscalers are growing because of the AI workload demand they're getting, that AI workload demand is intrinsically tied to the number of chips they have in their data centers to be able to supply the compute for those AI workloads, which means a lot of these stocks that are getting hit because the AI trade is dead, like how can someone logically say that? I'm not opposed to listening to that argument, but like, how do you logically say the AI trade is dead when you're seeing Azure grow by 40%? The reason they're growing is because someone is buying AI workloads from their cloud. The reason they're buying those AI workloads is because someone is seeing the value in AI in their business. And as a result of that, Microsoft needs to give $19 billion to Nebius because they have way more demand than supply. And as a result, Nebius has a business model. So there's a variety of layers here that I think make it very hard for me to say that AI CapEx trade is over. I think this is a lot more about uncertainty around rate cuts in December. Maybe I'm wrong, but overall, that's kind of how I'm thinking of it. Morgan Stanley today expects NVIDIA to post its strongest quarter in a while, as well as Blackwell chips ramp fast. Analyst acknowledges that NVIDIA has trailed other AI names, but Blackwell remains the top chip in demand, especially for Vera Rubin is very strong. Industry checks now show a clear acceleration after earlier bottlenecks were fixed. CEO Jensen Huang suggested revenue estimates need to rise by 70 to 80 billion. Morgan Stanley boosted its forecast, but notes NVIDIA stock is still about 10% below where it traded after his comments. So you got Morgan Stanley saying, dude, we think Jensen's going to absolutely wipe out the quarter. And we think that we need to increase our expectations on NVIDIA, signaling that the AI CapEx trade, again, to me, is not really over. KeyBank raised their price target to 250 today. Same exact argument. They think Hopper production is increasing. You have more tailwinds. NVIDIA has resolved some of their supply chain bottlenecks in regards to servers. And as a result of that, they believe demand continues to outstrip supply, which is bullish for NVIDIA. So again, if you think the AI trade is over, that is fine. We just saw big tech earnings, and the AI trade to me was not over. The one hiccup, I think, across all those earnings, which we didn't get Oracle earnings yet, but the sort of big issue over the past week has been Oracle's bond issuance, which, yeah, that I definitely think the market should be concerned about, because when you're issuing all this debt to be able to fund everything, that gives flashbacks of times when things have been ugly. The question is, to what extent is the debt issuance as a percentage of the overall CapEx being spent? And right now it's very low. If that continues to increase, I guess the market will continue to be scared. But again, if that debt issuance results in an eventual ROI on all the CapEx that is being built out, which maybe the market's skeptical about right now, but if you think that entire thesis is broken, then you get out of the AI trade. If you don't, then eventually these become dips, even if they are not at the most attractive levels at this moment. So that's kind of how I'm thinking about it. I do not think this is about AI. I really do. To an extent, it's about AI, obviously. And a lot of these stocks that are down, like a Palantir, which is an AI trade, like a CoreWeave, they're still up a lot for the year. So they're getting the wind taken out of their premium multiple, but they are not, going red for the year. Whereas then you have a Meta that actually as is one of the best companies in the world going red for the year. So it's just hard for me to say Meta at $5.99 is the top of the market. It's difficult to make that argument given the earnings multiple that it's trading at. But obviously there is the fear of that AI trade. I am leaning more towards this is a broader problem right now with the lack of data transparency. And I also wonder how the market's going to open. We got about 20 minutes until the market opens. I mean, again, pre-markets are pre-markets. When the market opens, I want to see, does the bottom fall out? Do people just say, you know what, we're done. This is completely over and we are getting the hell out? Or do people step in and say, these are absolutely ridiculous levels and we are going to start beginning to buy? Here's U.S. Trade Representative Jameson Greer. He was just live about 20 minutes ago. Looks like he's announcing a new trade deal. Market doesn't care about it. But here's what he had to say about Switzerland.
Where do things kind of stand in terms of the who's on deck?
Sure. So Switzerland is probably the next one. I just met with them yesterday afternoon. I've spoken with the president just this morning and yesterday. I've coordinated with cabinet colleagues, Secretary Lutnick, Secretary Besson, the chief of staff, and this is something where we've essentially reached a deal with Switzerland. So we'll post details of that today on the White House website, where they're going to send a lot of their manufacturing here to the United States. Pharmaceuticals, gold smelting, railway equipment. So we're really excited about that deal and what it means for American manufacturing.
How long was that deal in the works, and what kind of pushed it over the top?
Well, it's really been in the works since April, when the president started his reciprocal trade program. Switzerland, like dozens of other countries, have been extremely interested in having market opening deals with the United States, where they open their markets to us and we modify the reciprocal tariff somewhat for them. Like all of the president's deals, we keep a tariff. We retain a tariff on these countries because we have to get the trade deficit under control. But because Switzerland, for example, has agreed to manage its trade surplus with the United States in terms of making sure that things where they have a surplus with us, pharmaceuticals, gold, et cetera, their companies are going to build here. So it's going to eliminate some of the sources of that surplus. I mean, we've already seen, Roche has actually broken ground already for a pharmaceutical facility in the United States. That's really exciting.
Okay, so increased trade deals good. Market obviously on a day like this is not going to care about it, but the administration is probably going to have to say some more stuff that gives a lot more details to how the market is thinking of what's going on right here. What are people thinking? So you guys know my thoughts. My thoughts is I don't think this is an AI CapEx trade dead fear sell-off. There's part of it involved in that. I think this is more related to the labor market and the lack of data. If people had to summarize in a sentence why you think we're going red right here, what would you say? The broader question is, again, do you feel fundamentally the market is changed in the past week, 2 weeks, whatever time frame you want to use, from when we were not even at all-time highs, but 2% higher from here, which was Monday, to be honest. Like, I mean, for all the people saying a bear market is starting, what happened in those two? And yes, there are a lot of headlines, layoffs, all that stuff. Those are arguments that can turn very bearish. 100% agreed. My question is just, is that enough definitive? Verizon laying off 15,000 people, is that definitive proof that a bear market has started and we are into 2022? I don't know. It's hard for me to easily go down that route. And if that is the case, the question then becomes, are you selling everything and are you going net short? Because I mean, it's easy to say a bear market has started. It's harder to say, well, I'm going to get out of this market completely and go to cash. Which, look, when you have the VIX that's up 10% right here in the premium, when you have stuff like that happen, we've seen that more often than not be panic fear and panic selling. Maybe that's the best option of what to do today. The question becomes, again, what is that core headline that you are looking at that is just like, yep, this is it. I'm done. I'm completely out. Bear market is starting. I don't see that. I see structural things that could lead to that if the data continues to be as bad and if you undermine and discount all of the growth and capex and AI and earnings, et cetera, et cetera. By the way, we are in extreme fear right here. But outside of those things, it doesn't make the most sense to me to be like, yep, bear market starting. Here's what Tom Lee had to say this morning on how some of this is playing out.
It is going to be from time to time going to show extended weakness. But to me, the underlying story driving technology, which is the productivity miracle coming from AI, is still intact. Mary Erdos even talked about this earlier this week from JP Morgan, that there's been a payoff in spending, and Lisa Su at AMD as well as noting that productivity lift is the reason AI spending is rising. That's actually still a tailwind for tech stocks.
Tom, if I could just follow up, you manage funds now, especially an ETF that's heavily tilted in some ways towards some parts of that kind of technology, media, and telecom trade. Has anything changed with regard to the price action or the fundamentals that have taken some of those names perhaps out of your portfolios?
Dom, we just actually did a rebalance for the Granny Shots ETF, our large cap fund. We still actually have about 40% exposure to tech. It's about a market weight, but to us, the visibility and the spending is still very strong, and names like NVIDIA are still reasonably priced. I mean, NVIDIA at 28 times forward earnings is still less expensive than buying Walmart or Costco. Costco is almost 50 times forward earnings.
All right, Ross, with that in mind, as you watch.
Yeah, well, I think it is helpful to think about where we are in the cycle. I know the Fed is a little hesitant the reason to cut in December, but the reason they're hesitant to cut is the economy is actually pretty healthy, and they just don't have a clear contour of how quickly inflation's cooling. That's a very good backdrop for corporate earnings, actually even corporate earnings to actually start to spread. So if the Fed gives us some guidance and visibility about path forward, I do think business confidence picks up. That means the ISM starts to recover, and it is a broadening trade. So I would agree with the other speaker that I like tech structurally because of AI spending, but there's still plenty of room for the small caps to work, which have really taken it in the gut as the Fed's sounded hawkish, and the banks. And so I'd be in sort of favor of a broadening trade as well. But I still like tech, and as you know, the AI trade comes under question every few months. There's always a big pullback, but for the last 5 years, investors have had to buy that pullback.
Ross, we'll give you the final word here.
People are saying Tom Lee this week made him skinny. You can definitely tell he looks a bit stressed. I mean, it's an ugly day. Tom manages billions and billions of dollars. So, when you're dealing with that type of money and you have a market drawdown, obviously it can get ugly and you can lose some sleep. Bitcoin right there, 95,000. Ethereum somehow holding above 3,000. I mean, I know Ethereum has got the wind knocked out of it, but goodness, the fact that it's somehow holding above 3,000 is quite incredible. But obviously that one is pretty much getting hit. So look, it's a ugly day, an ugly week, and I don't really know what the remedy for this is today, especially given it's a Friday, you've got options expiring, etc. I will say there's probably margin calls that are being triggered as we speak. And for people that are heavily using leverage, I mean, look, they're going to have to sell. Either they're going to have to sell or their brokerages will sell something for them. And until you get a reversal in any capacity, not even a full reversal, just like just some level of like stopping the bleeding, that selling could continue. The question here becomes, and again, we looked at these macro stats a couple of days ago. The question here becomes, are the institutions buying? And from what I showed you guys from the Bank of America research, that last week, 4.3 billion of ETF inflows came in. That was the highest in a week since December 2022. Those were institutions. Those were not retail. Those were not hedge funds. Retail and hedge funds actually were net sellers last week as of Bank of America's research. Institutional money managers were net buyers. And then take a look at this. As per Bloomberg, ETF flows yesterday. Yesterday was also an ugly day. 11 billion. Good chunk of that was U.S. equities. Some of that was treasuries, and then some of that was gold. Those are the top 10 ETFs on the screen right there. You have the Qs, S&P 500, small caps, XBI. That's the biotech ETF is up there. GLD for gold. Triple QQ was up there. It had 245 million. What degens yesterday? Which one of you guys bought triple QQ and leveraged up on the NASDAQ? But like, you know, when you see 11 billion of inflows come in yesterday, again, like for everyone screaming, it's a bear market, it's done, it's the top, it's over. I'm like, yes, I understand it's a fun dopamine fulfilling thing to say around calling the top and being bearish and getting all the attention for being negative and feeding on the negativity. But just like the practicality of it to me is in question, especially with the S&P 500. Again, a traditional bear market is S&P 500 down 20%. S&P year to date, even with this drawdown, I mean, it's 14%. If you want to call it 12 or 13, well, now it's 15. So yeah, if we get 13, 13.5 based on the pre-market action, then okay. But that's not a bear market. We could end the year at 665 on the S&P, and that would be a hell of a year because we had 2 years back-to-back of 20, and then we had 1 year of 13, 14%. So again, the people that are like, this is just fun, and this is just what I'm seeing on Twitter and trying to like see the other perspective. It's a lot more people dunking that a stock is down and they're happy to see the community that supports that stock suffer, versus people saying, I'm going net short, S&P's going back to 6,000, and it's time to completely say that this market is done. Because when you look at the earnings growth, it is really hard to make that argument and say that that is the case. Now, maybe that changes, but based on the data we have available, I think it's just hard to make that argument. Tess says they are literally stop loss harvesting and pricing margin out and buying cheaper. It's what you should be doing. Yeah, no, I agree. I do think that at a moment like this is when margin, stop losses, et cetera, start to really accumulate. And the velocity of that impact can get aggressive. Like we even saw it yesterday. I mean, we had a little bit of an intraday reversal yesterday, but I saw NVIDIA go from like 187 to 182 back to 186 within 10 minutes. Like, why did it go from 187 to 182? Because a lot of people probably were getting margin called at the moment, stop losses, all that was getting, and then it just reverses. And it sucks when it reverses within a couple minutes of you selling. But like, that is exactly how it plays out every time. Now, if there's a more structural problem, then obviously those losses can continue to get worse. But the point is, this stuff happens, and being solvent on a day like this, especially if you're on leverage, I think is one of the most important things. Question is the Sano rally still intact? And yeah, again, I think that really just depends on the data. I think the worst case scenario, for those that want a worst case scenario, I really don't think it's about the AI trade at all, because just based on the earnings I'm seeing, the demand is there. The demand is outstripping the supply by a wide margin. And so that's not really the concern of it blowing up. I think the worst case scenario is the labor market data is very bad, and the market is not ready to discount stocks enough based on underwriting how bad the data market is, or the job market is, which is why they might not be releasing the data. I mean, like, that is your biggest bear case going into the year. That stops a Santa Claus rally, and that potentially stops a rate cut, although theoretically that would be bullish for a rate cut if the data is that bad. But I don't think it's the AI trade. And I think that's what more people are thinking that could be the case. Ugly day. Ugly, ugly, ugly day. Let's put the poll in the chat, green or red. What do we think is going to happen today? Tell Triple V to save us. I was talking with him in the morning. I mean, all are down pretty badly. Triple V runs $1 billion portfolio, so it's obviously not looking the best for him. But we were talking in the morning. He thinks it's a buying opportunity. because again, to put you in his mind, he was just like, okay, what's changed? I was like, well, nothing. He's like, okay, so like, what are we talking about here? It's like, all right, cool. Like, what has changed? It's like, yeah, we have some issues with data transparency and all this stuff, but like fundamentally, what has stopped this market from being the way it is? And if there's something that's not as prevalent there, that's when people end up buying the dip. SoFi did get added to granny shots. So for all the SoFi bulls, Tom Lee did buy $98 million of SoFi. So that is now in the granny shots ETF, which is very exciting for SoFi as well. But like SoFi right here is what, 27? What has changed from SoFi at 32? I mean, like in those $5, can you make a real argument for why SoFi deserves to be up or down? It's like, I can't. It's really hard to make that argument outside of it's going to go down with the entire market if the market gets hit. Quantum is taking a hit. Yes, a lot of those high beta names are getting the wind taken out of them at a bit of a higher level. D-Wave right there down 7%. IONQ down 5%. Rigetti down 5%. Nuclear Oklo is down 7%. I mean, again, a lot of those names that were very, very high beta, those are getting hit hard. And so this is where you test your conviction, right? Do you have a lot of conviction in a IONQ, enough to buy the dip here? Or was it just a trade because of whatever reason you bought in? But in Amazon, that's also down from like 255 at 237. Does that look attractive here? And, is it easier to hold an Amazon versus one of those other names? I think a lot of that decision-making across the retail investor ecosystem will be happening today as well, to get people to think, why do they want to be in these names in the first place? But I'm curious, we got 10 minutes. I mean, let's ask this question. When the market opens, what do you guys think is the gut reaction? Put in the chat, up or down. I mean, obviously, just looking at the price action, it would feel like it's down. It would be a major U-turn if buyers step in immediately. Or the reason I say it's also is down is because I think we got to get to Friday lows, which is 661, about 0.5% from here, for really getting the buyers to be interested like they were on Friday. So the panic, margin call, stop losses, etc. Maybe that's enough. It's kind of 50-50. Some of you guys saying down, some of you guys saying up. 2 p.m. reversal. See, again, but that 2 p.m. even yesterday, Trump was talking at 2 p.m. some executive order, but he didn't take questions, right? He didn't give any comments about what's going on in the markets, nothing. So it's like, even if you were to have some reversal, my question is, what would be the reason for that reversal? And there might not be enough of that. Yeah, Amcor is at 29. Like Amcor was at 37 last week. By the way, this is my point about how I don't just think this is the AI trade. Amcor was at 37 last week because it got a big upgrade to 62. And even at 37, the reason we started talking about Amcor is because it's a cheap name in the semiconductor space that's virtually a monopoly. There's like 3 other players that are with them in a very hyper-specific role around packaging for semiconductors, specifically in the TSMC Arizona region that's helping NVIDIA build their chips. That was trading at one-time sales when we brought it up. We brought it up at $28.50, $29. Got to 37. It's not like it was trading at 50 times sales. That's, it's a nice move, but it's not a crazy move. And now it's back down to 29. Nothing has changed. In fact, you could only argue that demand has increased based on all these updates around AMD and NVIDIA. And then obviously the upgrades that it got. So like, why is it back down to 29? Well, it's back down to 29 because it's going to fall with the entire market. A lot of these names are just going to go down with everything. Some of these names are going to get hit worse, like a MicroStrategy if Bitcoin gets hit worse, or just like a super high beta name. But that doesn't mean the thesis has fundamentally changed. And that's the thing. And just to give some context, going back to 2022, the thesis fundamentally changed on everything for 2 reasons. Number one, the most obvious, rate hikes, right? That changes everything. I mean, that changed the thesis on Robinhood instantly because Robinhood was a 0 interest rate phenomena at the time. The reason people were signing up is because money was cheap and they wanted to invest in things, right? You hike rates, that changes the thesis completely. For a lot of these growth stocks, the cost of capital goes up like small caps. And so there's like all these different implications of rates going higher, which immediately changed the thesis for everything. And then number 2 was the deleveraging of the COVID era build out. in employee workforce. So for example, Meta hiring like 30,000 people when they didn't need to during COVID. I mean, that obviously led to a massive strain on their free cash flow. And you had not just Meta, but pretty much every company engage in that. So when you have rates that are going up and then you have earnings that can't match the reality of the internal economics of businesses, small businesses, but also very large businesses like Google, Meta, Amazon, those are structural things that fundamentally change the paradigm that investors have to think about allocating capital, which is why money market funds have their biggest surge in over 40 years, because people said, you know what, I'm going to stay on the sideline, and because I'm getting 5% to do nothing. Is that paradigm, or is that delta between how investors are thinking of the world versus how investors could be thinking of the world going into 2026, is there such a wide margin within that delta to create an entirely new paradigm to think about how to allocate capital? Which I would have to argue two things have to take place. Number one, the Fed has to completely give up monetary easing, which I don't think that's going to happen. I think the opposite is going to happen. And then number two, the AI trade has to be dead. It's that simple. Those two things have to happen. And if those two things don't happen, I don't know if you're necessarily going to set up for that type of 2026. Trump just posted. All right, we got 6 minutes until the market opens. The Democrats are doing everything in their withering power to push the Epstein hoax again, despite the DOJ releasing 50,000 pages of documents in order to deflect from all their bad policies and losses, especially the shutdown embarrassment, where their party is in total disarray and has no idea what to do. Some weak Republicans have fallen into their clutches because they are soft and foolish. Epstein was a Democrat, and he's the Democrats' problem, not the Republicans' problem. Ask Bill Clinton, Reid Hoffman, and Larry Summers about Epstein. They all know about him. Don't waste your time with Trump. I have a country to run. Okay, so I brought up the Epstein stuff a couple of days ago, and the reason I brought it up is because I do think that it is having a PR implication on the administration, and the fact that Trump is tweeting about it and not tweeting about tariffs, not tweeting about the economy, not tweeting about grocery prices. I mean, his last tweet before this tweet was Jeffrey Epstein, and the tweet before that was about Jeffrey Epstein. So the last three things that Trump actually typed out, not just like memes or videos or anything, the things that he either typed out or his secretary typed out or whatever that he wanted the world to know about, was about Epstein. I think that also could be a risk to the markets in the face of, hey, like Trump's just not going to be talking about anything else like the stuff we care about, which is asset prices, tariffs, inflation, et cetera, because he has this PR issue to deal with around Epstein. The absolute worst case scenario on this is that the files are released and you have a lot of Senate Republicans that are getting ready to vote to increase, to release it. And going against Trump on the vote to not release it. If it is released and there is something deeply incriminating, which I don't know if there is, I don't know if there would be. I don't know what that even does for the country at that point. So, and maybe that's why he's spending so much time really focusing on it. But nonetheless, in terms of markets, the markets are going to have to digest the news of like the president not really caring about stocks at the moment, but caring more about this PR thing. And so we're going to have to see what happens with this as well. If that happens, market will be cooked. Well, at least the market will have clarity. Yes, the market, I think, will be cooked if something like that does happen, but the market will finally have clarity on knowing what the hell is going on with this, because this has been an issue that the market, has been wondering about as well. It's just, it's been able to ignore it given earnings have been so good. I mean, quite frankly, the Epstein thing came up back in May, and I don't think we talked about it over the past 2 months because earnings, AI, investments, and the super cycle, like all of us started getting preoccupied with other things. The market definitely started caring about other things. This pops up and it pops up in a more violent way. Yeah, the market's going to start to care. And they're going to want to have some level of clarity on the trajectory of what's actually happening. 3 minutes until this market opens. Let's see what you guys said in the poll. Pull this up. Red or green? I would bet most of you guys said red. 67% say red for today. All right. In the next 2 minutes, we're going to see how ugly it gets. I will say in the pre-markets, it did get worse than what it is right now. So it's a very, very minuscule bounce, but it is not at the absolute lows. So in the next 2 minutes, we see if that gets taken out immediately or if that forms any level of base to go higher. I think the number one thing for today is, can we stop the bleeding? And, part of the reason Bitcoin tanked yesterday is because the South Koreans woke up and they saw the Americans sold off everything. So they started selling off everything. And you got a lot of South Koreans that are in these high beta plays, obviously Bitcoin being one of them, especially from a perpetuals futures contract, which is like getting you leverage on your position. And you probably had a lot of deleveraging happening across Asia and across the entire world to create some of this pain. So global markets at this point are deleveraging, and the question becomes, when does it stop, if it does stop? But today we're going to have to see. Fear and greed is extreme fear. That is correct. Fear and greed is indeed extreme fear, which, usually signals more people buy the dip than not when that happens. But today we're going to see kind of how the market is thinking about all this. All right, here we go, folks. We got about 20 seconds. Been an ugly week. It has overall been a strong year, but you have these ugly weeks in these strong years, and now it is up to the market to see how they want to navigate the volatility of what we have been experiencing over the past couple weeks, and ultimately where this goes. Thank you, everybody, for being here. It is Friday, November 14th, 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. S&P 500 down 1% on the day, 665.30. Down 1%. Again, the low in the pre-market was 663, but we are down. NVIDIA, 182, got a little bit of a bounce. Palantir getting a little bit of a bounce. Robinhood getting a bit of a bounce. Tesla getting a bounce. MicroStrategy back above 200. SoFi getting a bounce. D-Wave getting a bounce. IONQ getting a bounce. Oklo getting a bounce. Everything. Meta back above 600. Nebius back at 84, up from 80. CoreWeave, that's back at 76. IREM, that's back at 46. The immediate reaction as soon as the market opens is buy. Now, that could change instantly, or that could be the trend for today, but the immediate reaction, at least on a lot of these names that got hit hard in the pre-market, is buy. It could be a dead cat. It could be not real. It could be, dip buyers coming in way too early and they're about to get slaughtered. Or it could be enough is enough in terms of the selling action. Google, that as well, still red, but up from 270. These are very small dollar moves, but they are not violating those pre-market lows. Yeah, Nubank had a great earnings, by the way. Phenomenal earnings on Nubank. That stock is down right here, but absolutely incredible quarter. They beat on the top and the bottom, and they continue to show how well they're executing. Rigetti right here, that gets a little bit of a bounce up from 23. Palantir, 162 to 167 is your move on Palantir. Now, again, is that enough to even form any level of the base? That's the question, but nonetheless, you are getting a bounce. Robinhood, so we went from 112 to 117. Now we're at 116.50. So as you can see, there's that red candle. Actually, we hit 118.66. Now you got a red candle. So that initial buy that came in is now getting hit with some selling. The question becomes, is that selling going to violate those lows we just had? Tesla, this one fell below 400, 387. It was at 445 a couple of days ago. It was at 400 a couple hours ago. Duolingo somehow is green. Okay, you got Duolingo going green. Verizon had a bunch of layoffs yesterday. Verizon is green. CRM, Salesforce, that's barely down. PayPal, that is barely down. If there's any ticker that's green, let me know in the chat, and I want to see which of these tickers are green. Circle is actually going green. They got hit pretty bad this week, so it makes sense they're getting a little bit of a rebound. T-Mobile going a bit green. That one's holding on to a little bit of momentum. JP Morgan goes down. Microsoft back below 500 again. Microsoft was back below 500 last week, so not that crazy in terms of price action. A lot of these names are getting back to where they were last week. It's just last week we were hitting some lows. Open Door down 8%. That's down. The VIX is indeed green. That's correct. Disney got hit 8% yesterday. Disney going green, 108. Upstart got hit badly over the past 2 weeks. Upstart as well going green. Upstart actually up 3%. Lennar is green. Home Builders. Again, a lot of these are more defensive names. They have not been the big performers this year. A lot of that rotation from tech continues to be something that the market is trying to navigate as well. Lennar right there, 123. That's up 1.43%. NVIDIA is still red. Where is NVIDIA? Has not lost the pre-market low yet, 181. It's not lost the pre-market low yet. Berkshire is green. That is correct. Berkshire Hathaway, there you go. Wow, Berkshire 516. Dude, wasn't Berkshire, hold on. I feel like this week. Yeah, Berkshire's up 4% this week. Berkshire was at 497 this week. Look at that. All right, people coming into value. That is an obvious sign they're looking for safety with Mr. Buffett right here. And they are getting out of tech. So Berkshire, there you go, up 5% for the week. S&P 663. All right, S&P loses 665, 1.28%. You're getting some names going green, but the S&P $2 away from that Friday low. $2 away from that Friday low. So that's still getting hit. Robinhood and Palantir have not hit their intraday lows yet, even though S&P is making a new one. Nebius as well has still not hit that low, even though it's down 83. BMNR at 34.65, that's down 5%. Obviously, Ethereum getting hit is wrecking that 3,100 on Ethereum. And then where is Bitcoin? Are we at 95? We are at 95.1 on Bitcoin. Rocket Lab, this one got absolutely destroyed. I mean, again, high beta, completely wrecked. 44. At one point, it was at 42 in the pre-market. So again, has not got back to those levels, but no, 41.50 in the pre-markets. But you do have an obvious decline from 70 to 44, right? And at 44, it's still up 70% year to date. So a lot of these are just losing that super, super premium valuation that they got earlier this year. Grab right there, that's down 2.4%. Google, that's down 2%. Nike, that's down 2.5%. Hims down 2%. Nubank, after a great quarter, that's down 1.6%. VG, is that going up a little bit? VG is going a little green, 1.65%. Got some people going into natural gas. But that one getting a little bit of green. Coca-Cola and McDonald's green. Okay, so that, I mean, you're obviously Coca-Cola, McDonald's, and Berkshire going green is obviously the market saying they do not want to play with NVIDIA and AMD right now. And they're going to the things that they know will never not have demand, aka things like McDonald's or Coke. AMD right there, 236. That's down 4.6%. I mean, look, it was not. I mean, we got to see how this kind of plays out. But if people expected a full-on like 4 or 5% dump as soon as the market opened, you did not get that yet. In fact, you got the S&P basically trying to hold on to 660, right back to 665 on the S&P. So you did not get that immediate, complete collapse. You are getting buyers to step in. And it's not a full-on rotation, but there obviously is a rotation. And that rotation has been happening all week, so that's not really new. Tesla, 391. There's your green candle right there. Palantir, 170, green candle. Robinhood, 118, green candle. Now, here's the question. Are we going to go through an entire Friday of green wicks up and then red wicks down and end up flat for the day? Which is a very possible scenario if the market has no idea which way it wants to go. Or do we develop a trend to the upside or downside? I don't know, but it would not surprise me if we go back and forth with wicks up and down. So, I mean, let's see. Robinhood 118, does that come back down to 114? Does that actually come down to 114? Ondas had a great earnings, and they're up 4% today. They were up 20% yesterday, so that one holding on is very nice to see. Ethereum just slightly went green. There you go, 3164. That is green. Nebius, how's that one doing? McDonald's right there, 307. Nebius, 85.66, up from 81. And then Rocket Lab going green as well. Rocket Lab was at 44, now at 45.65. Again, still down a ton for the week, but I think the goal of today is, can we stop the bleeding? Or is there a world in which the bleeding stops? Bitcoin 96. Okay, so you're obviously seeing a little bit more of the dip bars coming in. Iran as well, very close to going green, was just at 45, now at 48. Red Cat, which it had a good earnings, but they just got hit pretty bad yesterday after hours. That's only down 4%. It was down about 10. They are going to release jobs data. That's correct. I mean, that headline came out a couple hours ago. The jobs data is going to not include certain metrics, though. So, I mean, that is one kind of headline they talked about, which is that jobs data will be released. It's just not going to be conclusive. But again, maybe more headlines today about data transparency, that maybe that could be enough theoretically to get the market to at least be a bit more excited about having some more clarity on what's going on. S&P high of days 666.20. 666.20. D-Wave thinking of going green. That is correct. D-Wave right there, only down 1.8. It was down almost 7 in the pre-markets. That is moving with the broader market. NVIDIA 184, down 1.4. All right, that's $1 away from potentially getting back up there as that continues to try to go green. Salesforce 237, Duolingo 188. That's still green. Tesla $8 away from 400. $8 away from 400. Again, this is going to be the back and forth between the bears and the bulls today. The bulls are probably looking at some of these prices and saying these prices don't make a lot of sense. Some of these stocks are probably still a bit expensive, but at the end of the day, a stock market is a stock market. Like, you could disagree with Rocket Lab's valuation at 44, but a drawdown from 70 to 44. I mean, there was a lot of new shareholders that were created over the past few months that are probably either DCAing or holding on or averaging down. So then the question becomes, does the market hate Rocket Lab at 44 so much that it needs to go back to 30 after all the progress and all the earnings growth and 3 cents away from profitability? And if not, is that the bottom? Or do the bears say, nope, doesn't deserve that price and it needs to continue going lower? And I think that's going to be the debate today. Grab right there down 2%, back above 542. UNH 326, 1.89%. We did get some 13Fs yesterday. David Tepper sold all of his UNH. Howard Marks bought another 1 million shares of Grab. Bridgewater bought another 4.5 million shares of Grab. They also bought new positions in Rocket Lab, Palantir, and Robinhood. We're still waiting on Altimeter's 13F and Stanley Druckenmiller and Tiger Global, but we did get some of the other ones yesterday. Also, Howard Marks bought Nubank, 4 million shares. It's a pretty big sign of confidence in what they're doing, and so a bit more diversification outside of the United States. Ondas, $7. Wow, up 7.4%. Ondas is a high beta name. It's not easy to get a name like that going green on a day like this. So if that's going green, you are seeing the market potentially get a bit more excited about buying the dip on some of these other names. NVIDIA right there, 184.55. Firefly as well. They had a good earnings a couple days ago. That one's up 6.5%. Robinhood's looking for 119. Again, Robinhood was almost at 112 in the pre-markets. It actually did hit 119 for a second. Got rejected at 119.42. And then Big Bear AI, that goes green as well. Like, you can hate a lot of the high beta names for whatever reason you do, but the other thing to remember is that after 30, 40% drawdowns on some of these names, the question becomes, like, are they going to go down 70 to 80%? And usually you see that in a full-on bear market, right? That's what we saw with Palantir, right? Down 80% when it was super high beta in 2021. A lot of those other names that maybe they don't have the trajectory of Palantir in the lifetime of their company, but they still, at the end of the day, have a stock price that is traded publicly. Like, after a 30, 40% drawdown, you tend to have some people say, all right, enough is enough. And I wonder if that is kind of what we might be seeing here across the board. Berkshire is going down. Look at that. Berkshire going down at the same time as some of these other names going up after the opposite. ETH is green. SoFi, again, this is in granny shots. I did not talk about the new BM&R CEO. I just saw that press release. SoFi right there, 2782. So they do have a new CEO. I don't know anything about this guy, but that was the headline today, that there is a new CEO for Bitmine, and 3 new people joined the board. Yeah, I don't know who any of these people are. I would have to go through them, but that is one of the headlines. Again, ETH's price action is going to be a lot more important for the overall trajectory of BM&R. 3187 on Ethereum. Nubank goes green. Tom Lee is not the CEO. He's the chairman. He's the chairman of the company. Yeah, Morgan Stanley raised their price target to NVIDIA to 220. We read the Morgan Stanley report this morning and the KeyBank report. Again, like, when you just look at the raw numbers on what these, maybe you don't think NVIDIA deserves the multiple they're at, but to say that AI is all fake and it's not real, it's like, I am sympathetic to the argument. I want to hear the other side, but then I just look at the raw numbers and I'm like, okay, well, if you believe that they're going to do this much in EPS and you put a 30, 40 multiple, where you're not giving NVIDIA a 90 or a 657,000 multiple. You're giving them something within 30 and 50. And like, yeah, that's a little bit of a premium when you're talking about 50, maybe not 30, but if a company is growing at the rate they're growing at, that is not abnormal in the stock market by any sense of the imagination. I mean, if Tesla can get a 200 PE and Tesla's not even growing, which there's obviously reasons it gets that premium for the potential of what they can do. But if NVIDIA is not allowed to have a 50 PE for the growth they're putting up, then what are we talking about? So the question then becomes, is that a bubble? And I don't know if that's the easiest argument to make. 186 right here on NVIDIA, that is giving you a bit more green as well on the day. I'll pull up the heat map in a second. NVIDIA very close to going green. Robinhood very close to 119. Red Cat still down 3%. Warner Brothers going green on the day. I did not see any Amcor in the 13Fs. Where's Amcor? It was at 29. Amcor is at 31. Okay, so you got some green candles right there as well. Micron is also going green. 243.2.72. Yeah, I mean, like, if you thought the AI bubble was popping, Micron doesn't go green. Like, but then again, if you look at Micron's earnings, again, you can disagree with Micron's multiple, but you cannot say that this is like bubble. To me, is more so a question of these companies are fake, and it's like these companies are not fake. Like, when you look at their earnings, they are very, very real in terms of what they're putting out, even if you might not love the multiple that they're trading at. Okay, let me pull up the heat map. It takes a second for it to update. D-Wave, by the way, going green. Robinhood, 119.29. 119.29 as Robinhood goes green. Tesla, 392. Oklo right there, going green. Now, some people might be saying, well, Oklo is indicative of a bubble. And there's two basic arguments to that. Number one, if Oklo went to zero, it's a $16 billion company. I don't think that would really matter. Right? If Micron went to zero, that would be a big deal because Micron is a very big supplier for memory. So like that stuff really matters. But Oklo, okay, that's not that big a deal. Number two is the reason Oklo is getting this multiple, even though I do not think it deserves it, but nonetheless, the market is the market, is because the market thinks, hey, if nuclear power is going to be that important and we need small modular nuclear reactor companies that are building this stuff, then we're going to pull forward that growth. That is the market deciding how the market wants to think of it, but there is a narrative for why it gets its valuation. And also, Oklo is down from 193. It's already been chopped in half. So again, a stock market is a stock market. When you get chopped in 50%, there are people that get interested in the price. Here's the heat map. Still red across the board. We have not totally flipped green. Still red across the board. It's just not as red as it was before. Potentially trying to go green. 186. NVIDIA's fighting for it. She's fighting for it. SoFi went green. HIMS went green. VRT, data center play, that just went 4% green. VIX is down 11%. Yeah, VIX is down 11%. I mean, it's still up on the day, but it's down from the highs, which again is bullish. Robinhood 120. NVIDIA 17 cents to go green. 17 cents to go green. 3,200 on ETH. Rocklab 46. D-Wave 24. NVIDIA 3 cents away. If NVIDIA goes green, it can hold that green. Again, that would also be very, very bullish. Markets would be pretty damn happy if we can get it there. Nebius 87, AMD only 2% down. S&P not 670 yet, but 667, which is nice. Look at that candle. Up from 663. 661 was Friday. We didn't touch that yet. Where's the Googs? 668 now, S&P. The Googs, 275. Dude, it's like we're all staring at horses at a race. Like, none of our family, none of our friends are staring at the S&P go from 663 to 668 and having just, absolute tears of joy seeing these green candles. But we are. It's a Friday too. Yeah, no one's working on a Friday. That's for damn sure. Has your portfolio gone green yet? No, but it's very close. I'm looking at it right now. It is, dude, my portfolio is nowhere near where it was in the pre-markets. Put in the chat if your portfolio went green. It is very close to getting that green. I mean, I'm just looking at a literal V on my Robinhood. So we're not there yet. Maybe it's a head fake. Robinhood 121, but as you can see, I mean, Robinhood was 112 in the pre-markets, guys. Like, what happened between the pre-market and now? What happened within 2 hours for them to add $10 billion in market cap? Like, nothing. NVIDIA went green. There you go. NVIDIA went green. From 180 to 187, NVIDIA has 24 billion shares outstanding. That is a $7 move. 7 times 24 is 168 billion. I mean, what happened in the past 45 minutes to have that large of a move? Nothing. Like, this is obviously being controlled at a deeper level around algos and stop losses and margin. That was probably happening in the pre-market that created more liquidation and all the selling pressure. Obviously, there are people that are coming in and buying, but you're getting the market to say, no, we thought 180 was enough for NVIDIA, at least for now. Maybe we revisit that. But at least for now, the market was saying that pre-market action was enough. Now, again, we've been whipsawed back and forth for the past couple weeks. It would not surprise me, not one bit, not one freaking bit, if NVIDIA goes back down to 180, because there was no reason for it to go to 180. One could argue there's no reason for it to necessarily go to 187. Maybe there's not another reason for it to go back to 180. I mean, this is a game of chicken that the markets have been playing really for 3 weeks now. And a lot of this has been due to the lack of data. So the markets are, trying to navigate it the best they can. But I think you got to be ready for both sides. You got to be ready for absolutely both sides. It's hard to say we're completely out of the woods. I would struggle to say that because there's no way you can necessarily know. NVIDIA goes red again by about 30 cents. So you got sellers at 187.22 that said, all right, that was enough of the bull momentum. And now they're taking it back down. Tesla right here, 394. They were at 396. A little bit of red candles, but from a much higher base than what it was in the pre-markets. NVIDIA does have earnings next week as well. That's important. TSSI, just a terrible quarter. I mean, it probably deserves to be down 40%. Like, this is one of those names. They're a supplier for Dell, and they really did not have the best quarter at all. Down 40% on revenue. Adjusted EBITDA margins getting hit. I mean, they're a supplier for Dell, but the market did not say hello to them. The market said goodbye. And that's why that stock is down 42% right here. Ethereum, 3,100. Robinhood, 120.5. And then Nubank, 1,580 as well. That was good, right? You can't lie. That was, dude, if AI takes my job, I'm just going to become a comedian. Like, there's like, I need to make sure that I have a backup plan. And, some of you guys might have heard that joke last night, but there's more people here that weren't there on the market close. So you need to democratize the distribution of the humor. And so I needed to spread the joke again to other people. So it is what it is, but comedy is the backup plan. Palantir goes green, 172. 172 from 165. Chad says, bro will be hungry. Dude, don't tell me that's not a good joke, dude. The level of intellectualism it takes to connect Adele and then the company Dell, and then to be able to know the popular songs, to be able to then mix that in with the punchline, which is the market said goodbye, not hello. Like, when you really break it down from a psychoanalytical perspective, it's a phenomenal joke. Like, actually phenomenal. And anyone hating on that joke, I just don't think you get comedy. That's okay, but it's important to understand the parameters of what makes a foundational joke actually good. NVIDIA right there, 187. That's green. Breaking through to new highs on the day, 187.30. Rocket Lab, 47.17. Robinhood, 122. 122 is green on the day. Okay, so Meta back above 600. We are seeing more green come in. It's just a question of if the market has the stomach to continue holding on to these names as more people come in and buy the dip. Does feels like there's more algo stepping in. Jokes like that are why we are down. Oh my gosh. It was a good joke, dude. It was a good freaking joke. JD, this one's down. They had a good earnings. I know a lot of people are in that one that got hit. Webull fell below $9. Webull still below $9, $8.91. Was it at 7? No, it was at 8.55 in the pre-markets. 8.90. So here's the thing, right? And this is no disrespect to Webull, but like, this is where you have to ask yourself, do I even believe in the company? Like, I deeply believe in Robinhood. And if Robinhood goes down, I am willing to deal with them going down because I just believe in them. Webull going down, do you believe in the second fiddle player in the market like a Webull? Or was it just a trade? And I think a lot of people are asking themselves those questions today. So Robinhood to me is not a trade. It truly is a very long-term investment that I want to be part of. And they will be ups and downs. That's part of the process. But I can hold on to it. I mean, a lot of people are probably asking, do I even care about Webull? Am I able to hold on to it? Or did I think it could just be a little mini Robinhood? Same thing with Big Bear AI today. You know, Barron's called it the next Palantir. I mean, a lot of people probably asking themselves who bought it at 850, do I actually think it's the next Palantir, or did I just, buy because of a headline? And those are valid questions on a day like this for people to ask. D-Wave 5.6. It was down 8% pre-markets. Now it's green. Iren barely red. Nebius very close to going green on Nebius. AMD as well, very close to catching up with NVIDIA and going green for the day. NVIDIA now 187.13. 187.13. Okay, so you are seeing some of the buyers step in. Let me see if I can find any of the other headlines that we're seeing right here. Extreme fear, we are still at 14, guys. So we are still obviously in that extreme fear category. Now it's at 15, so it's not at 14 anymore, but nonetheless, still extreme fear. China warns citizens against visiting Japan in near future. That headline just came out. China warns citizens against visiting Japan in the near future. Okay. The last thing we need is a China-Taiwan issue. I hope that's not the case, but you have that. And then you have China's export controls on rare earth causing shortages, raising prices for users and aerospace chip making, sources say. That stuff should be resolved as we have a new framework with China on rare earths. NVIDIA right there, 187.40, high of day. As that one goes green. I don't have a reason for why they said to not visit Japan. I'm trying to find out. That's just the raw headline on what they said. Oklo is up 4%. NVIDIA, wow. If NVIDIA hits 190 today, dude, I mean, if you bought in the pre-markets, you got a real big move. SoFi right there, 28.69. SoFi trying to get back to 30. And then Palantir, 172. Extreme fear of more jokes. Oh my goodness, dude. That was a good one. It was a good one. Even if you didn't laugh, you have to acknowledge the structure of it was good. Amcor 32, S&P not green, but it's only 0.5% away. Okay, so dip buyers obviously stepped in at 663. That was your level today so far. I know it's only 27 minutes in, but that was your level today so far. About it. A-Lab's up 4%. Vertib's up today. Yeah, you got a lot of these names starting to go green. Look at that. A-Lab up 4%. They had a crappy week, but they're up. Beyond Meat, how about that one? That is up 10%. I mean, dude, we're really going to... like, this is... I mean, if Beyond Meat's going up, you would imagine NVIDIA is probably catching a bid. Like, someone right now is buying Beyond Meat. Admit my neck hurts from this whiplashing. Yeah, I mean, all of us this week. I just would like to hold it towards the end of the day. Like again, I don't think any of us want to be greedy today. The number one thing we should all care about, even if the day ends red, is let it be a very slight red. because whatever the hell we saw in the pre-markets, which was not that long ago, was ugly, like very ugly. And if we can just stop the bleeding, that would be a win for today. That would be a win for the day. Open door, 890, that goes green. Yeah, we need stability first. A lot of the buying could be short covering. That's also correct. My neck hurts from headbanging. CoreWeave, how's that one doing? You know, I actually watched a video on CoreWeave last night from ticker symbol U. That one, yeah, that one's not really catching too much of a bid. It still is up in the pre-market. And he did a really good job explaining the I guess you could say moat of CoreWeave. Now, I still don't love their debt profile, which is why it's hard for me to buy it. But there's a reason why investors are interested in the name in the first place. And it has to do, again, with all the contracted GPU licenses that is a result of outstripping demand over supply. It's just that simple. Which is why when you get the .com comparisons, again, it's just really hard to get on board with that. I'm more on board with a bear who makes an argument about the labor market than I am at all with a .com comparison. I mean, yeah, even if you look at Palantir's earnings, like Palantir, which is not like a foundation model company, but they're actually making sense of the models. They're growing at 63% off a large base. Like you can't get that type of growth unless something happens in the market that forces a level of inbound, because they don't have a sales force realistically, to inquire about your product and service. Like when you experience that type of hyper growth, is because something is happening that is, one could argue, beyond your control. And if you can harness the opportunity of what's happening, you can materialize it into meaningful earnings growth. So again, when people say, well, AI is fake, it's not real, it's like, well, why are these companies growing then? Like, why are they growing? like what's the reason for that? Is Palantir getting paid millions of dollars by companies for fun? Like, are these hospitals that have said they're saving $10 million a year, paying Palantir $30 million because they like Alex Karp? It's like, no, like they're paying them for a product and service. And that kind of pushes back against the argument that none of it's real. Nebius right there, 8807, as that goes green. How about SoundHound on the day? 1223. That's green as well. VIX really getting a wick down now. VIX, yeah, dude, it was up 15. Now it's up 9. It's a pretty big decline right there. Still up on the day. S&P just got a red candle, but still trying to hold 668. I don't think anyone is actually arguing that AI is fake. The actual question is around ROI and how fast that ROI comes. I think that's a fair point. But the implication of questioning the entire structure of ROI and then as a result making the comparison to the .com bubble is basically saying we have overspent on CapEx, we have overspent on chips and like the supply of those chips in those data centers. And the reasoning for that overspending is nonsense because there's not an actual return. And that's why I point to something like Palantir's earnings. Again, so AIP launches in June of 2023. I think that's when it was like ChatGPT 3.5 or whatever. Now we're at ChatGPT 5, which is a model that Palantir is implementing. OpenAI pays a lot of money to build out the CapEx to train that model. And as a result, the quote unquote ROI on that model, at least from an enterprise workflow perspective, is the 63% revenue growth that we saw on Palantir, because Palantir doesn't get that type of growth unless you have an LLM that is as good as a GPT-5 or a Grok 4 or whatever that they can actually deploy in a hospital that would be willing to pay them $30 million a year. Like without that LLM in the first place, there is no ROI, right? Because that's the whole point of operationalizing AI. So the question then just becomes, we're spending trillions of dollars on CapEx. Will there be multi-trillions of dollars of ROI? And I think that's a fair thing to be skeptical about. But my point is, in the early innings, are you seeing signs of that progress? And I feel like the answer to that question is yes. And not because I'm guessing, because I'm looking at the earnings. Gemini 3.0 is about to be fired. Dude, there were some engineers on Twitter last night tweeting about Gemini 3.0 that got early access to it. I mean, I was just excited reading the comments that they were posting. I mean, they were saying this is like one of the most significant upgrades they've seen in a large language model since Sonnet 4.5. And so again, you got to think, like, what does that mean for Gemini? What does that mean for Waymo? What does that mean for enterprise adoption? What does that mean for Palantir when they can make sense of a Gemini inside of an enterprise that allows them to generate more demand and more revenue? Like, all of that stuff takes GPUs to build out. All of that stuff takes data centers. And eventually the ROI, which is, again, it's still a question, should manifest itself. And you either believe there will be an ROI or you don't. And then the secondary derivative question is, if you think there is an ROI, then are you paying a reasonable multiple for these names? And I can understand that people that think Palantir and Tesla's multiples are aggressive, but again, Meta at 20 times, Google at 27 times, Microsoft at 32 times, those are not unreasonable multiples, which is why it makes me feel more confident to say we are not in a bubble, because the multiples are not as egregious. And Gemini was already great. Yeah. And the fact, that this is the worst AI is ever going to be, which also is very exciting, because that just means the best is yet to come, which requires a ton of build out. But that also means we should be seeing a lot more margin enhancement and ROI long term if we get better models. Walmart CEO is stepping down. Was the street upset about that? Walmart down 2%. He was there for a long, Doug McMillan, right? He was there for a while. Walmart's also defensive though, as it's going red. Open is up 3%. Do you think that was a fake pump? I have no idea, but again, that's why I said a couple of minutes ago, I would not be surprised if we whipsaw back down for no other reason other than there was no reason to go down in the pre-market, no reason to go up that quick, might not be any reason to go down. So if you're buying the dip, if you're selling into this, if you're kind of hedging, navigating, I personally think we are not out of the woods. And we could easily go back down for the same reason we easily went back up, which is that there is no reason. And, that's just the nature of volatility that we're all dealing with right now. But time will tell throughout the day if it ends up being a pump that can sustain itself. DoorDash up 4%. This one got hit as well after their earnings. So that one getting a bit of recovery there, 4.3%. There is no world where we can go to without AI. I also agree with that. I mean, it is very hard to imagine going back to a world without AI. Even just my Tesla, right? Like, just when I go for a drive every week and it drives me, it's just like, it is hard to imagine going back to a world without that. And self-driving is in the very early innings, whether it's Tesla, Waymo, whatever company ends up really winning in that space. It's going to require a lot of compute capacity to make that actually meaningful. And that's why you got Elon talking about we need to build our own chip farm. You got people saying it's a dot-com bubble and all this stuff is fake. And Elon's like, we need to build our own chip farm because in the best case scenario, Samsung can't actually provide us with enough GPUs or with enough chips in our infrastructure to make sense of the GPUs that we have. I mean, at that point, I think it's hard to say it's fundamentally fake. We got some Fed news right here. Let me pull this up. Got some Fed speak. Let's see what they're saying about this December cut. And then we'll keep going from there.
I think they feel that they can look through tariffs as a one-off price increase. So they have to sort of see what goes on. The inflation expectations have been very under control.
Indeed, both on the upside and the downside, where we've been through the mill on CPI. We are getting some breaking news out of the Fed. For that, let's get to Steve Leisman. Hey, Steve.
Hey, Carl, yeah, timing's everything. You asked about Schmidt. We got Schmidt here, Kansas City Fed president, who dissented at the last meeting, saying monetary policy is modestly restrictive. And that, he says, is where it should be. He suggests in the speech he's about to give his intention to oppose additional cuts again in December. Says mine could change, but right now that's the way he's leaning. Cuts, he says, won't help the labor market much, but could have a lasting effects on inflation and inflation expectations. He says it's too high. Meanwhile, he says the economy shows momentum. He sees strong consumption and solid gains in capital spending, a big part of his outlook here. He hears continued concern from his contacts in his district about the pace of price increase and not just about tariffs. Healthcare costs, insurance, electricity, a whole range of things. And he sees inflation spreading. The most recent data, he says, shows inflation is above 3%, going to remain there and spreading. And he's concerned that persistent inflation could cause this idea of price increases to become ingrained in people's psyches and force a sharper rate increase down the road. policy he says should.
Did he just say it could force a sharper rate increase down the board? I mean, again, this is another reason. I mean, the markets are kind of losing that intraday high that we had. Part of it is probably because of this guy's comments right here. I don't know if the Fed is looking or caring about the labor market, but the fact that they're even thinking of suggesting a rate hike in this environment means that they're picking inflation over the labor market right now.
Against demand growth right now to relieve pricing pressure. And quickly on this discussion you were having about the labor market, this is Schmidt's idea. He says it's cooling, but largely in balance. It reflects more structural changes than cyclical changes. And the payroll break-even rate, the one needed to keep the unemployment rate from changing, his staff suggests is just around 50,000. And then one other observation he makes, which is a big part of his thinking, and other more hawkish members of the Fed, they look around and they do not see things indicating tight monetary policy in equity markets being at or near all-time highs, narrow corporate bond spreads, and very robust high-yield issuance. Guys?
Okay, so this gets at the point I was just making. I wonder if they're opening themselves up here with arguments like that to, well, the Fed's just making monetary policy then for people who own stocks, people who are investing in data centers, tech companies. He cited the high levels of capital spending. That is not reflective of the entire economy. And when you say it's not that restrictive, go tell that to the now 40-year-old first-time homebuyer.
I hear what you're saying, Sarah, and I think there's a lot of good ideas in that. I guess that he would counter and the hawks would counter that they have to make policy for the aggregate economy, and they have really just one tool. And if the CapEx numbers are higher, regardless of whether there's a single source to that CapEx, the Fed has to react to the aggregate number. If the overall GDP numbers show growth, and we're going to get a lot of data hopefully soon that shows whether or not that is the case. If the overall GDP data shows that there's growth, even if only a few sections or sectors of the economy are part of that, the Fed has to react to that aggregate number.
I get it, of course.
If there are individual sectors of the economy, Sarah, that are showing problems, that's more the provenance of the fiscal side. If they want to help housing more, they can help housing more. If they want to help non-AI investment more, well, they can help non-AI investment. The Fed can't do that by sector.
I guess so, but they have one tool, and their tool is interest rates. And what do interest rates control? They control mortgage rates, they control borrowing rates, and things like autos, which is also showing some stress, and other parts of, consumer economy. Part of their mandate is to address the labor market, which has shown signs of weakness. So I don't know. I get you can make this argument on both sides, which is why it's so fascinating going into this meeting. Steve, I wonder. So it sounds like
fascinating is one word to put it. I mean, confusing would be my word, because again, and correct me if I'm wrong, but all of us were here 3 Wednesdays ago listening to Jay Powell say that they are more concerned about the downside risk to the labor market over the upside risk to inflation. He also, to his credit, did say, don't expect a December cut, which kind of started all of this downside pressure and kind of confusion in the market because Jay Powell was so explicit about no December cut. But he said the labor market is the bigger concern. And then over the past 3 weeks, 3 headlines that were kind of the main ones, and there's a lot more than that, but Amazon, 30,000 layoffs, Verizon, 15,000 layoffs, UPS, 48,000 layoffs. I don't understand as a Fed how you can be more concerned about the labor market, see those types of headlines, which are not just headlines, by the way. We spent some time watching people make their layoff videos to kind of humanize what has actually happened. Like those people legitimately got laid off. And then you see subprime auto picking up, as Sarah was saying. You're seeing housing prices continue to go higher. Like you see all of that and say, oh no, we are too restrictive. We need to hike. Like I'm sympathetic to the argument that you don't need to cut rates to 1% tomorrow, but the idea that 25 bips is going to explode inflation after 3 weeks ago citing that inflation was not the primary concern is asinine. It is unbelievable that that is the pivot that the Fed is going through. And it really makes you question, how could they possibly be justifying it? How could inflation be that dramatically higher that, or the perception of it is that dramatically higher that it's causing the lack of the trajectory for a rate cut? unless I'm wrong and the inflation data is well above expectations. I mean, like we're running at 3%. Let's say it's at like 5% right now, or 3.9% or something. Like, let's say it's just so abhorrent that the Fed has no choice but to stop it in its tracks. But is it like that? I mean, even if we get the data, like I don't think it's that intense. And so the question then becomes, do we sacrifice the labor market for that? Pricing is back to Jan of 2024. That's correct. And that would be very, very weird to imagine if it ends up playing out in that same trajectory. Ethereum right here, 3161 just went red on the day. As that one gets hit. CoreWeave again, the other data center plays are red, but they're not as red as CoreWeave. CoreWeave uniquely, the market is not loving what they're doing with their debt. CoreWeave right there, 73.82. Palantir back down to 170. Again, a lot of these names green from the pre-market lows, but they are getting hit with some red candles. And a lot of that probably is from some of the Fed talk. What exactly happens if they decide to cut rates? I don't even know if that like saves the market or anything, or if that's like I'm not even talking about rate cuts in the context of the market. I'm talking about rate cuts in the context of the economy, because eventually the economy catches up to the market, and we're kind of seeing that with the labor market right now. If we do not cut rates and people continue to default on credit cards and subprime auto, and the overall capital spending environment becomes significantly reduced because of high rates or just rates that are not affordable enough, then that'll eventually show up in earnings. Now, if we don't get a rate cut, like if we do get a rate cut, market doesn't have to go to the moon. But if we don't get a rate cut, it's definitely not going to help the market stay where it is. And that's the asymmetry with the trajectory for this rate cut. Netflix, is Netflix getting crushed today? Netflix, wow, 3% down. I mean, could the market be thinking that people are going to lose their jobs enough to the point where they start selling off some of these consumer subscription items? Maybe that's a stretch, but not sure why else Netflix would be down 3.7% right here. Netflix is down because they're in a bidding war over Warner Bros. That actually that makes sense, because Warner Bros is up and Netflix and Paramount and Comcast are down. I don't know. I think Warner Bros has some really good content with HBO Max. I do think Netflix needs some of those shows. Nvidia just went red, but do they want to pay $50 billion for that? Trueflation is at 2.5%. That is correct. And Trueflation has said that that the prices of groceries are going up. It's they're not denying that. It's just, is it going up to the point where you sacrifice the labor market? Let's get a little bit more coverage on that, and then we'll keep going from there.
Like Schmidt and Collins would be dissents if the Fed keeps cutting.
Yeah. I'm fascinated by the pickle that Powell is in at the moment. As I game this out, I think he has 5 or 6 potential dissents here. You mentioned some of those that were on the fence.
Yes.
Maybe, by the way, Kashkari last night, we could talk about next year's board as well. Kashkari last night said he did not support the October rate cut, even though he did not have a vote. Bostic was similar in that regard in terms of future cuts. So, but in terms of voters, I think he could have maybe 4, maybe 5 dissents for a cut, and he would almost certainly have 3 for if he did not cut. So this is not good in terms of the way the impression it gives. And I think the only hope that he has right here is that, as you were suggesting,
The data.
economic data comes out, it's definitive one way or the other, and that allows the Fed to coalesce around a majority.
Gold down 3%. You're not seeing people go to gold for safety. Wow. First time I'm looking at it today. Gold down 2.7 and then silver down 4.3. By the way, Tom Lee just tweeted, he said, equity and credit markets are protesting the hawkish Fed talk, the December cut being up in the air. This is why repo rates are rising. The VIX is surging. Markets bullying the Fed towards the December cut. Be patient. This will resolve itself positively. Kind of making the same argument here around the pickle that Powell is in, and the market's trying to bully him to give us that cut.
Or a much more clear majority decision.
I know, but what are we going to get? A September jobs report, hot or cold? It's old. It's old news.
No, we're going to get. I think we're going to get November. We're going to get the November jobs report, and we will get. I think it's. I'll check my calendar on this. I think. No, we should get November before the December meeting. I think.
Yeah.
Right? For
I
the month
see.
of November.
Yes.
October is the black hole that will. The black hole forever, where light goes in and nothing comes out. Apparently, we will also get the CPI report for December, I believe, on the second day of the meeting. and I don't know where the PPI comes out in that regard. I talked to somebody at the BLS, and this person was just waiting for instructions. One of the economists who heads one of the divisions, I had a background conversation. He's like, call back in a little bit when I know something. There's a page on the website that has the heading for the dates for the new releases, but the page is blank, and I'm refreshing it every other minute here.
That was supposed to be today, by the way, PPI for November 14th. Thank you, Steve.
Steve, thanks. Let's continue that conversation.
All right. The lack of clarity on this December rate cut definitely creating more pain. But again, we are not, S&P is almost at highs of days. We are not really at the levels we were at in the pre-market or anywhere near that, unless we were to get a hit going higher. But not seeing that yet. Here's another thing I want to show people. This is another chart that I saw yesterday. I've never looked at this indicator, but it is an indicator that's important. So there is something called the MOVE Index. And the MOVE Index measures the volatility of the U.S. Treasury market, indicating expected fluctuations in interest rates. A high index value suggests high uncertainty and risk, while a low value indicates a more stable interest rate environment. And so if you take a look at the MOVE Index right here, let me share this. You're not seeing this massive spike in volatility. If anything, it's been down year to date, 18%. Got a bit of a spike here in April. That's when it was at 137 and the Fed was, that's when bond yields were at like 5% on the 10-year and the 30-year. And now we're at 79. There's that little upswing from 65 to 79, but you are not seeing some dramatic increase in the option volatility estimate for the credit markets. This is not for the stock market. This is for the overall economic landscape, like the VIX tends to capture. This is just for Treasury yields. And the fact that the bond markets are not really screaming, even if equity markets are annoyed at the lack of a cut, is basically Wall Street saying we're not really, or at least the private credit part of Wall Street saying we're not really buying into this. At least not at the moment. Dan Ives is on. Okay, let's go to Dan Ives and tell us that it's 2 p.m. or 2 a.m. at the party. Let's see what Mr. Dan has to say.
You pound the table on the tech trade. You've been super bullish. Do you not have concerns now about monetary policy, as the market rethinks the cut for December and the overall frothiness or valuations around AI?
Yeah, look, Sarah, I get some of the nervousness, but I was just in Egypt for 3 weeks. And demand to supply for NVIDIA chips are 10 to 1. Demand's increased, call about 30% since June from what we see. You look at hyperscaler, this is a CapEx super cycle. So it's my view, if you're in the second, third inning, to be sort of bearish and nervous here, I just view it as short-sighted because I think there's a tech bull market that goes on for another 2 years. And I think these are golden buying opportunities for the names that I view where Street's underestimating numbers 20, 30% over the next 12 to 18 months.
But do you think there will be a point where the CapEx should get more scrutinized, until the profitability materializes to match the level of spending?
Sure, and look, and I get the scrutiny. Like if you look, obviously, Meta and Oracle, and you see some of the worries there, the circular financing in terms of OpenAI. But to me, it's all about you're building out a new economy on the consumer, on the enterprise front. For every dollar they put on CapEx, they're going to ultimately make $8 to $10 on that over the coming years. So I just think that is the best move for these companies in the arms race. And that's why for Meta, I've talked about that's a table pounder on that stock in the sell-off. Oracle, same thing. And, so many times we've talked about in your show, like these are the opportunities, whether it's DeepSeek or other moments. And then investors are like, I missed it. But these will be the opportunities. I think you're going to have a massive tech rally into year end.
You can tell the fire in Dan's voice right here. He is not taking any of this BS around a bear market. I mean, he is straight up saying, nope, these are the moments you take advantage of it because nothing structurally is broken in the overall secular bull market thesis around AI.
Dan, Oracle's a great example. What explains that early September gap getting filled as we are back to the 200-day here for the first time since June?
Yeah, Carl, I think it's just worries about debt, taking on financing, CapEx, the depreciation, the open AI pop. Like, did they get over their skis? And actually, I disagree. I think Oracle, this is a massive renaissance that they're going to see. I mean, you talk about they're 2% penetrated within their install base when it comes to AI. Everything they're doing are the right moves. And I think this sell-off here, we're going to look back 3, 6, 9 months from now. And this was just, I think, a golden buying opportunity on Oracle. And I think right now the nervousness is coming out, but it just comes back to 3% of U.S. enterprises have gone down the AI path. And I think that goes to 20% over the next 18, 24 months. That's what you're playing for, especially in the second, third, fourth derivatives. We see it, cybersecurity. Right. I see human proof authentication. I see it on, infrastructure, Nebusis, CoreWeave, and others.
Does that view extend to Tesla, which, as we said earlier this morning, is now red for the year and worst performing Mag 7?
I think actually Tesla is probably, of all of these names, that's probably the one to me that sticks out the most. Because in my opinion, the future about autonomous and robotics, Musk, obviously right now, wartime CEO, you look at the coming years, I think Tesla's a $2 trillion and ultimately $3 trillion market cap because autonomous, 80% of autonomous, I think Tesla's going to own. So I get the stock selling off here because you can't see it in the numbers. But I mean, this is something where I look out 600's base case, 800's bull case. And Carl, that's my view. I mean, I think this is only, like I talked about, this is just the early days of a fourth industrial revolution. And for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
Yeah, I mean, that's the bull case, Dan. So aren't there going to be winners and losers? It sounds like you like all of the big players.
Yeah, and sorry, there's going to be losers. I mean, if you look at Adobe, are they a loser? If you look at some of the other sort of large cap names, like they're trying to sort of, I mean, I think Salesforce, is going to be a winner, but they're obviously under a lot of pressure from a software perspective. You look at some of the infrastructure plays like a Cisco, they're turning it around. I think it's really more about the second, third, fourth derivatives in software. I look at names like Nebius. I look at names like CoreWeave and the Selloff, because it's all, to me, about for every dollar, and this is the most important stat, for every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. $3 trillion that's going to be spent in the next 2 years.
Right. But you, in your view, it's all the hyperscalers that are the winners, the Amazons, the Googles, the Microsoft, Meta, you said, is a table pounder. So everybody that's spending big now.
Well, I view it as, if they're not spending, I actually view it as a negative. Like if Meta ultimately pulled back and they raise numbers for next year and they cut CapEx, I would view that as a huge negative because Zuckerberg right now, wartime CEO, building out what could be monetization, an incremental 40, 50% on advertising, on the consumer side, and even as they build out on the glasses and on the hardware side. That's the smart move for Meta. I also look at names like when you think about, we've talked about like in the power side, nuclear, names like Akko and others. I mean, this all is about the second, third, fourth derivatives. People think that this is sort of a white knuckle, clock strikes midnight moment. I've talked about it. This is nowhere near a bubble. It's a 1996 moment, not a 1999, 2000 bubble moment.
Is there any demarcation line between names you would like and not like? Oklo's a great example where you're either talking about no profits or in some cases, in quantum, for example, minimal revenue.
Sure. Yeah, and Gar, I think that's where you have to be selective in terms of like the winners and who ultimately is going to be there. I think there's going to be other nuclear plays, right? There's going to be other power plays out there. If I see the demand is showing cracks and I see customers cutting back, the ROI is not there, use cases aren't exploding, then we get negative. But to some extent, it's the opposite. If you look at where we are right now, and I just think like globally, given where U.S. tech is, this continues to be what you want to own. And I think for the winners, and look, if you focus just on valuation, 1 year out, 2 year out, you missed every transformational tech stock the last 20 years. And that's why I focus on, we talk about in our odds AI 30, like who are the winners in the different sectors.
All right, Dan, make a full-throated case. Thank you very much for joining us.
Thank you.
We appreciate it. Dan Ives from Wedbush.
Look, Dan has been saying the same thing for the past 2.5 years. And so he's just reiterating the core argument around the idea that demand is outstripping supply. And as a result, you're going to see earnings growth. Wow, 669 on the S&P. Very close to 670 right there. And again, the last thing I think Dan said was the most important. He was like, look, if we don't see the ROI, if we don't see the level of build out leading to anything meaningful, that's when you get negative. But the opposite is happening. We're seeing the exact opposite, yet people are getting negative, which is the sort of irrational disconnect that happens time and time again in the market. And that's why he's so bullish on the idea of just like, okay, this is an opportunity at that point if the data doesn't match the reality. Robinhood as well going green again. Hoodie from 112 to 123 almost, 122.40 on the day. S&P did not touch 670, did it? No, got really close, 669.96. Rocket Lab goes green. D-Wave's up 3%. IREN's down 2. Nebius only down 3. AMD is barely red. NVIDIA, are we still green on NVIDIA? We are slightly green, just below 187. But we are indeed green. Tesla touched 400, really? Oh, Tesla got ugly in the pre-market, dude. Tesla, look at that. 399, 400 on Tesla. Got to 382 in the pre-markets. It is 1030. Maybe it's 1030 recovery instead of 1030 slam. There it is, 670 on the S&P. All right, so we are 0.3% away. 672, we go green on the day. 672. And if we go green on the S&P, you see a lot of these names are going to catch up. NVIDIA and Hood already starting to try to catch up with the S&P. I think most people portfolios are very close to going green on the day. 669.84, trying to break out and hold above 670. So now if we were to go down to the 663 lows of the pre-market, or of like 935, you would basically need to see a 1.5% decline from here, which is possible. It's just a question of, you know, do the sellers come in at that level, and for what reason would they be more excited to sell? Meta right there, 609. Look at Meta. This was at 598 in the pre-markets. Again, pre-markets, there's low volume, but there's a lot of people that get scared. That could have created a lot of selling. And then MicroStrategy right there, 199. That's down 4%. Portfolio's cooking after being cooked. Oh my gosh, dude. Oh, we can hold 670 on the day. This would definitely not be the worst way to end out on Friday. SMCI up 2.5. Soundhound green. Dougie, thank you for the 5 gifted. Appreciate you, man. Paul, thank you as well for the 1 gifted. 5 of you guys. Jack, you got a membership. Hans, you got a membership. Krishna, you got a membership. Jem, you got a membership. And Ty Gordon, you got a membership as a result of Mr. Dougie Dallas. Open Doors going green as well. Micron up 5%, dude. Yeah, I mean, all right, so obviously buyer stepping in on this. You're not letting her go down as bad as it was in the pre-market. Dude, I mean, if you woke up at around like 6:30 and you looked at your portfolio, it was just like the numbers were just laughable. It's like in the Joker in The Dark Knight when he just starts laughing even though he keeps getting punched. Because it's like at some point you just laugh. You're just like, oh, it's this bad. All I can do is laugh. And you know, that's what some of those prices look like. And usually when it's to that point, which is what it was during April, you don't sell because it's like, it's so hilarious that one could argue maybe this is not reality. I'm not saying we can't get back there, but that's definitely kind of what it felt like in the pre-markets. Grab right there, 546, UNH Still down 3% on the day. Han says I'm crying, not laughing. Oh my gosh. Tess, thank you for the 5 gifted. Appreciate you as well. Corey, you got a membership. Andy, you got a membership. Braden, you got a membership. Justin, you got a membership. And Paul, you got a membership as well. Thank you, Tess, for those gifted 5. Google trying to go green. The Googs. And then NVIDIA really getting a move now, 187.35. Again, this is kind of what we were talking about last night as well. It's just like all of us, Chris, me, Steve, Dougie, Austin, all of us, even if we have different perspectives on individual stocks, the consensus was this is not 2022 where you had fundamental structural paradigm shifts in the economy that created the 19% drawdown that we saw. Also, remember, 2022 happened after printing $8 trillion in less than a year and having interest rates at 0. Like when people try to compare the time frame to now, Pounter, by the way, 174, like you can point to a lot of different things you're upset about and that there are cracks and things are toppy, yada, yada. Like those are all valid criticisms. But to say structurally, we are coming off of trillions of dollars of stimulus and rates that were at 0, meaning literally you had to put your money in anything other than the bank account or a money market fund to get at least some level of return. Of course, that was going to create an inflation epidemic. And of course, that was going to lead to massive overhiring. And of course, that was going to lead to negative earnings growth. Like, I don't know what the similarity is between now and then, if I had to compare the two. And if there is some massive similarity, then I would be curious to find out how is that similarity actually taking itself into the stock market? Because what we saw in 2020 was you could say, hey, like the Wall Street could be like, hey, like what is your EPS? And you could say, oh, we have a cup of pudding as our earnings per share. And Wall Street would be like, wow, that's a nice cup of pudding, 20%. Like that, like that's literally what was happening in 2020 for those that were actually trading during that time or even remember what it was like buying the stock. Now you could say, well, we have a 5-course meal, and Wall Street's like, well, steak's a little overcooked, even though it's a really nice steak. You're down 30%, which is what Robinhood did. I mean, Robinhood is one of the best quarters I've ever seen in a company. Falls from 140 to 110. Like anything they can nitpick off of a great quarter. So this is not the same time. In a euphoric top, you are putting out horrible numbers, and the street is rewarding it. Right now, these companies are putting up amazing numbers. The street is not even giving them the benefit of the doubt. Now, granted, a lot of these stocks have already run, but still, I think that's the difference between now and 2022 as well. We have a Trump tweet. No, it's just, oh no, we got it again. Okay, here we go. Trump tweet. Now that the Democrats are using the Epstein hoax involving Democrats, not Republicans, to try and deflect from their disastrous shutdowns and all of their failures, I will be asking Pam Bondi and the DOJ, together with our great patriots at the FBI, to investigate Jeffrey Epstein's involvement and relationship with Bill Clinton, Larry Summers, Reid Hoffman, JP Morgan, Chase, and many other people and institutions to determine what was going on with him and them. This is another Russia scam with all arrows pointing to the Democrats. Records show that these men and many others spent large portions of their life with Epstein and on the island. Stay tuned. Oh, shit. Oh, shit. Hold on. I have to hold on. I gotta just, this is the reaction to that tweet. This is the reaction to that tweet.
She said, well, what did your mother say? I took a deep breath. I looked at my friends. I was like, it's about to go down.
Oh boy. All right. So for Trump to try to deflect from the Epstein stuff, essentially he's saying, I'm going to investigate you guys now. And if you guys really want to put me on the pressure seat, let's put Bill Clinton up there. Let's put Larry Summers up there. Let's put Reid Hoffman up there. Does the market like it? Hold on. Are we going green? Oh, if we go green on this tweet. Oh my goodness, we are $1 away from going. We are. We're at intraday highs. I think we literally just pumped on that tweet. I mean, I think we literally just pumped it. Robinhood 123, Palantir 174, Nvidia 188, almost. Tesla above 400, S&P 670.5. Trump just said, if you guys want to go after me, I'm going to use the entire Department of Justice to investigate Bill Clinton, Larry Summers, Reid Hoffman, and JP Morgan Chase and their ties to Epstein. Holy shit, dude. By the way, there is ample evidence just in the ether for anyone who's even kind of kept up with the Jeffrey Epstein. So you don't have to be an ultimate historian about what's been going on here, but if you've even kind of kept up with it, those are the names that have popped up time and time again. Bill Clinton, literally, you have eyewitnesses saying he was on the island. Reid Hoffman introduced many people to Jeffrey Epstein. And then Jeffrey Epstein did a lot of business with JP Morgan Chase and Deutsche Bank. That was another institution. So, and Larry Summers, he's in all these emails. So, I mean, if you were to have a full-on investigation there, you have some very powerful people and institutions that probably don't want to be investigated. And I imagine Trump doesn't want to be investigated either. So what he's doing right here is a game of chess and basically saying, if you guys, what he's doing right here, this is my interpretation, is he's telling Bill Clinton, Reid Hoffman, Larry Summers, which are very influential in the Democratic Party, to go tell the Democrats to sit the F down. That is what he's implicitly telling them right now with this tweet. Because if this full-on investigation does happen, it's almost like if Trump knows he's going down, he's not going down alone on this ship. And the market loves it. 671, 671.11 on the S&P. Dude, I'm not going to lie and put in the chat, did anyone expect that would be the pivot he plays? I will admit 1000% I had no clue he would go that route. I quite frankly thought he was a bit cooked on this Epstein thing. I'm not going to lie. Thought he was a bit cooked on this, especially if the Senate Republicans vote on releasing the files. And I'm not saying he still can't be cooked on this, but if the pivot is telling billionaire Democrats to go get everyone to not vote for this because of whatever influence they have, that definitely turns a bit of the tables here. He still could be cooked, but this is a hell of a pivot. Ethereum 3,200, Palantir 174, Google 277, Hoodie almost 124, S&P 670.6. It's the only card he can play. I mean, it definitely feels like that, right? It definitely feels like it's the only card he can play. I mean, the fact that he is straight up saying, all right, if you want to do the Epstein thing, then let's get down the Epstein road and let's have the entire DOJ focus on this issue, which means it will be headline news every single freaking day if the DOJ starts making an investigation. I mean, the strategy 5 months ago was to like just deflect and ignore, and it worked. But now that it's brought back into the limelight, it's almost like Trump is like, okay, let's run into it. That's the strategy. But let's turn it against them to make them want to get out of the limelight. By them, I mean the Bill Clintons of the world. And maybe that ultimately kills the story, which is what I think he's looking for right here. Nvidia 187.89. This is pretty wild. It's pretty freaking wild. And again, this is the last 5 tweets that Trump has done in the past 24 hours have been about Epstein. So obviously it is an issue that is on his mind. And he's trying to sway the public opinion on. Palantir right there, 175. Palantir 175. Not Matthew. Thank you for the gifted 5 memberships. Appreciate it. And late starter investor, thank you for the gifted 5 memberships. Justin as well, thank you for being a gifted member. Appreciate you guys who are gifting memberships. Thank you all for being here. But goodness gracious, what a freaking pivot. And okay, so why do we think, here's my question. Why do we think the market went green on that tweet? If we assume the market went green, well, which the S&P 500 not literally green yet, but very close, 671 on that tweet. Do we think the market is thinking that this puts an end to the Epstein overhang because he just flipped it? Or do you think, I mean, like, how would you interpret the market liking this tweet? Unless this wasn't the reason for the market going green. But I mean, dude, that was, as I'm reading the tweet, we saw that green pump right, that green candle right there from 669.60 to 671.18. That was like literally when I was reading out the tweet. Maybe it's nothing to do with Trump, but maybe it is. I don't know. Goodness, dude, that is wild. Green might be unrelated. Maybe it is. Pouncer right there, 175.30, hood 124. The fact that he's not tweeting about tariffs or inflation, he's concerned about this. Like, it is obvious he's concerned about this. And putting that out there is only just showcasing how concerned he really is starting to feel. It's the Fed data release, not Trump. What Fed data? I don't have any Fed data that came out. If you're talking about Fed talk, that was 30 minutes ago when we talked about Schmid. So unless there's a piece of data I'm missing. But I don't see it yet. 13Fs. We'll see if we have anything else. Okay, we have a few more 13Fs that are starting to come through right here. Nothing crazy that we're looking at. We do have a Chris Hahn. He manages 52 billion. Sold off 40% of Google, added 47% to Visa. Wow. Added some Moody's and SPG&I, and then reduced 5% of Microsoft. A lot of these are pretty concentrated portfolios. Sold Google, added Visa. So swapped out tech for financials here. On the 13F. Oracle right now, that's also moving. Again, dude, I mean, maybe it's just algos that got this next leg up to officially go green on a lot of these names, or maybe the market's reacting to the Epstein stuff. Palantir 175, Tesla 403, Nvidia 188.30, S&P 20 cents away from heading green, and then Robinhood 124.20. $124.20. You know, remember when Elon tweeted that Trump was in the Epstein files? I mean, obviously Elon had some information, and it's pretty obvious that Trump is annoyed and doesn't want this stuff to come out. So Elon knows something. Trump now flipping the script. I mean, this has just become a complete story that is now going to manifest itself. And what the hell does Reid Hoffman say to this? What the hell does Bill Clinton say about this? I mean, you got other people. Bill Gates. I mean, Bill Gates' wife quite literally said she left him because of the relationship with Epstein. Like these are real people that have contributed heavily to the Democratic Party over the past few years that are potentially involved in this. And if Trump goes this route, it could really be an interesting narrative for how the trajectory of this could play out. Bitcoin right there, trying to get to 97 as well. AMD 249. The funny thing is that almost no one cared about the Epstein thing until Kash Patel made it a thing during the campaign. Yeah, I mean, that's why you're seeing some of the broader MAGA base get annoyed that it hasn't been released, which is why some of these Senate Republicans are actually willing to vote on the release of the files, because their argument is Trump was campaigning, he was going to release it, and then we had to pivot. So I don't know. I mean, this just took a completely different turn. A completely different turn. S&P 500 goes green, baby. 672.50. 672.50. We are green. Wow. We go green. Trump tweeted again. Okay, this time is about the markets. Cost and inflation were far higher under the sleepy Joe Biden administration than they are now. In fact, costs under the Trump administration are tumbling down, helped greatly by gasoline and energy. Affordability is a lie when used by the Dems. It is a complete con job. Thanksgiving costs are 25% lower this year than last under Crooked Joe. We are the party of affordability. Okay, first economic tweet in over 24 hours, making the same argument that he made on that Fox News interview a couple days ago, that affordability is the focus and that they inherited some higher costs from Joe Biden. Markets are liking it, 672.44. 672.44. Wow. I mean, this is kind of crazy. This is kind of wild. Nebius right there trying to go to 89. Robin trying to go to 125. Palantir 175. My portfolio just flipped green officially for the day. Flipped green. I would imagine a lot of other people with the S&P going green, flip green. Tesla right there, 404. NVIDIA 188. Micron 251. Netflix 1120. S&P 672. All right. There's your pivot. So far for what we're seeing. Let's get an update on a couple of pieces of news, including the Walmart CEO retiring, and then we'll keep going from there. But we are getting a bit more of a pivot.
So he's run 3 businesses, including Sam's Club. I did catch up with Ferner very recently, October, in our CNBC Invest in America Summit. Remember, he gave a pretty strong read on the U.S. consumer.
Customers are spending at a healthy rate. Our back to school started strong. So we're seeing a consumer that we've described now for a couple of years is very resilient.
Yeah, already talking about back to school starting strong. Carl, he takes the reins in February. Doug McMillon will sort of stay on the board till June and then remain an advisor. So it's a sort of planned and smooth transition. It's interesting because Walmart is going to have a new CEO next year. So is Target, one of its big rivals, a new CEO, also an insider, also worked his way up, Michael Fidelki, but coming from a very different position in terms of strength competitively, as Target has to pull off a turnaround story. Walmart has been riding high, and part of it is it's taken share from places like Target. You can see the increase in the stock. I mean, this was, I don't know, $300 billion company when Doug McMillon took over. Now more than $800 billion company in market cap. You know, John has been someone who has had a number of jobs within the store, but he's going to be the guy that takes Walmart into the era of AI, right? Doug has done, part of his success has been the pivot to e-commerce and digitalization, what they've done in the warehouses. And the next chapter is going to be one very much built on innovation and technology as well, as they incorporate AI into the business.
Yeah, interesting to see a lot of succession at consumer companies, Timo, Target, Nike, Starbucks.
Yeah.
More on the Walmart news, at least. Let's bring in Walmart analyst joining us this morning. Greg Melich has a buy rating on Walmart. Target.
Walmart's still down on the day based on some of the defensive names getting hit. Wow, new highs S&P 672.65 on the S&P. Robinhood touching 125, Palantir touching 176. This is quite incredible. This is quite incredible, dude. This is why we invest. You go through the pain of looking at the pre-markets to the euphoria of it not being as painful within an hour. Greatest show on earth. Greatest show on earth. Market by tweet. I mean, this is just, it is pretty freaking crazy. Is this a dead cat bounce? I mean, you're talking about Palantir would have to go back to what was the lows today? 162 or something? I mean, Hood would have to go down to 112. I mean, you would have to see a pretty ugly wick down. I mean, you could still get a wick down, but now, given how high we've gotten from the lows, it would have to really be a nasty move down for this to be a dead cat bounce and to completely lose all of it. Which I don't know if that easily happens. Oh my, oh my, oh my, oh my. This is a pretty dead cat. Not even Schrodinger's cat ever ended up this alive. Oh my goodness. 161 on Palantir, right? Yeah. Again, like it's a stock market. This is one thing that Tom Lee says all the time. Like it's a stock market. These are individual stocks. When they fall aggressively, you have people that come in and say, hey, I missed Palantir. I want to get some exposure. I missed Hood, but at 110, their multiple just went down dramatically, even though the earnings went up dramatically. So I want to get in. And so you have people that get interested, but you also have panic sellers that get out. And then you have algos that go back and forth. But the number one question in the pre-markets was, is this something structural that has, destroyed the fabric of this bull market? That does not feel like the case. Look at Meta, 610. 610 on Meta. What's your personal opinion on Meta right now? It's an overreaction. Yeah, I mean, look, I think they're cheap. Could I see the CapEx spend not being rewarded in the future? Yes. It's just, you would have to bet against Zuck's finding any use case for that CapEx right now. And I don't think if you want to buy like 100 shares, I don't think you buy all 100 right now, but I definitely don't think you buy 0 if you really do want to build a Meta position. So then the question then becomes, how much do you subjectively feel is worth at least beginning to get into a position? And I think whatever that percentage is, it has to be greater than 0, because you just don't get massive opportunities on Max 7 names at these multiples. Zucks would have to really mess up in 2026, and like, it's a $2 trillion company. Like, they'll make mistakes, but I don't know if they mess up to that extent. The VIX about to go red, is it? Let's see. VIX. Wow, yeah. Dude, it was down almost, it was up 20% today. Now it's up 4%. Like, the fact that you're seeing that level of volatility spike up and down, I mean, that is your obvious on panic sell. Mate, do you close your covered calls early on red days to lock in gains? Yes. Yes, I actually closed a couple covered calls yesterday. When you get that red, the benefit of the covered calls is that they're basically, up 70 to 80%, especially when it gets really red. That's when you pay a little money, get out of those calls, and, write a new set of ones if you want to write more calls. But obviously, waiting till the stock moves up a bit and then writing calls would get you more premium. Google right there has not gone green yet. Google's trying to go green. Palantir 174.90, and then Hoodie 124.50. BMNR, how's that one doing? BMNR, it's up from 32. It's at 35. ETH, we're at 31.80, and then Bitcoin 96.7 on Bitcoin. Amit, one thing before I leave, I just got a package from Hims. Didn't know my wife was subscribing. Dude, your wife signed you up to Hims, Dougie? or is she a subscriber to the hers part of it? Bullish Hims. Bullish Hims. Meta, someone just bought $1 million of calls, 6/20, December 5th expiry, 1.7 million. 1.7 million expiry. Not me. She's on hers. That's hilarious, dude. That's hilarious. That's so funny. Did you ever tell her about Hims, or does she just learn about it? If she learned about it herself, like the whole brand, that is actually super bullish. That means an Instagram ad probably caught her attention or something, and she legit ordered it herself. Yeah, 6/20 calls, 1.7 million. Doesn't 6/20 is the strike. I didn't mention to her. Well, you got to give Hims credit. I mean, they released that product yesterday, that $199 per year subscription for their labs thing, but their marketing is top tier. And that marketing obviously has led to a stronger customer acquisition funnel. Oracle up a little bit. Ram, thanks for the super chat. Have you noticed more chatter about Zcash? I have. I have no idea what Zcash is. I've heard about it. I've never actually looked into it. Winklevoss twins announced a treasury. I would imagine, I mean, there's a lot of people that are getting interested in it. So you're probably going to have some digital asset treasuries around Zcash. I know that it's correlated with Bitcoin in a very sophisticated way, if I'm not wrong. But I don't know what the hell it is. But it has made a good move this year as well. MP, it's a privacy coin. You know, there's actually been a lot more of this whole privacy coin narrative coming out there. I think there's a couple of VC funds that just funded some companies working on private blockchains. Like the idea of like, how do you have more encrypted transactions on the blockchain that protects your privacy? MP materials right there. That's up 3.8% on the day as well. It's the same as Bitcoin, but adds privacy. Okay, so it's a total noob question, but doesn't that take away the point of a blockchain? Like, if you're not going to be transparent, isn't the whole point to have a public ledger? I can understand why people don't want it to be public, obviously. But isn't the sort of philosophy of crypto to have it public? Now, if there was sort of a crypto ecosystem where it could be private and you could get the benefits of crypto, but also the benefits of privacy, that does seem very attractive. But it does seem like it goes against the actual like intrinsic point of a public ledger for a blockchain. But again, I don't know that much about Zcash. MP59, Hood 124, S&P barely giving up the green, 671.80, 663.27 was your low for the day. It won't matter with quantum. Dude, if quantum solves the cryptography part of Bitcoin, that'd be crazy. That'd be absolutely crazy. What else? What else do we see? It's already 11 a.m., so we got to 11. Do we have Hassett on? We had Hassett on yesterday at night. Let's see if we have anything else here. Did you see the new Skrelly short? What is he short? Is it another biotech? He's out of the quantum shorts, right? I don't think he's still in those. Oh, you had Mr. I mean, let's listen to Ron Barron. He was on today. More about Tessie. SoFi 28. We looked at Oaktree's 13F last night. We looked at a bunch of those last night. He did buy more Grab. He bought more Nubank and more Seed Limited as well for Howard Marks. All right, here is Ron Barron on Tesla.
5% of your personal investments are tied to Elon Musk through either SpaceX or Tesla or XAI.
It's about 40% personally. It's about 40% in Tesla and about 25% in SpaceX. And the balance 35% in our mutual funds. And in SpaceX, I think we're going to make 10 times over the next 10 years. Tesla, I think we're going to make 5 times. And my mutual funds, I think we're going to make 3 times. So it's obviously riskier if you put a large percentage of your money in one entity. For our mutual funds, it's about 22% invested in SpaceX and Tesla, 11% apiece. And then XAI, that's an investment that's smaller right now, but we've only invested, I guess, $350 million in XAI. It's now worth $700 million. That was 2 or 3 years ago. And the next pricing is going to be probably double where it is now. It means about $1.5 trillion, so it's going to be in our top 10 in the next time they price.
I was thinking back to several years ago when you actually sold some Tesla. You did it at the time only because the stock had increased so much in value to the point where it made you a little uncomfortable with how big of a position it was in the funds. It wasn't a commentary on you losing faith in Elon Musk or in the stock, but at the time you said, look, I can't as a fund manager have that big of a position in it. What has changed? Because I think you have a much bigger position today.
Well, I didn't feel uncomfortable, but my clients felt uncomfortable, and I was being criticized for having such a large investment in one company. And we had bought stock at $10 or $15 a share, 12, and it was trading at 220. And we sold for our clients about 25% of their investment. I wanted to make sure that they knew that the reason they held the stock was because I thought it was still interesting, as opposed to that I had died. And so I didn't want them to think I died, and that's the only reason they still owned it. So we sold a quarter of the stock, and then the stock hadn't done anything for 3 or 4 years. And then when President Trump was elected, the stock in the first part of this year went up dramatically, went up to 400, and we sold 5% more. So we sold 30% for clients. I did not sell personally a single share. And what I committed to the board of our mutual funds is that I was the last purchaser I haven't really invested in stocks since 1992 in public companies. And I told the board, if you let me invest in this, when I tried to get everyone else to invest, nobody else wanted to at Barron Capital. So I said, if you let me invest a certain amount of money, then what I will do is I will promise that I won't sell any of my stock. And I told you I wouldn't invest, but let me break my promise and let me invest. And then I will be the last person out of the stock. So I will not sell a single share of my company, of my shares, until my clients have sold 100% of their shares. And I don't expect to sell in my lifetime Tesla or SpaceX, either one.
Wow.
All right. So Ron Barron not saying anything that he hasn't said before, but he has been pretty optimistic on Tesla for a long time. And he did make that promise to his board years ago that he would be the last one out whenever it is time to sell. The fact that he has not invested in public companies in over 30 years, but Tesla is the #1 sort of correlation in his funds is pretty incredible. I mean, it goes to show how much faith and how much trust and respect he has for Elon Musk. They have a big stake in SpaceX as well. So look, obviously Tesla has continued to get a premium and earnings growth will have to come back, but Barron Capital continues to be bullish on them. 403.55, that's up 0.5% right there on the day. S&P slightly going red, AMD as well slightly going red. Got some red candles across the board. I think even if we end lower than where we are today, even if we end red on the S&P, I would be happy that it's not at the worst of what we saw in the pre-market. Today's goal was to stop the bleeding. Anything else is a cherry on top. But it would be nice to just stop the bleeding. That would be the most important thing. Matt says, found you this week. Appreciate the content. Matt, thank you for being here. Appreciate you being part of the show. We are here every morning and afternoon. Today afternoon, by the way, we're going to have that startup that I told you guys about a week ago that I invested in. They're going to come onto the show and kind of show us what they're working on. It is in the crypto finance space. They raised $15 million from Benchmark, which is like one of the biggest VC funds in Silicon Valley. They invested in Uber, Snapchat very early. So they'll hop on the show in the market close and give us kind of a takeaway of what they're doing. By the way, speaking of crypto startups, I did see something last night that I want to show you guys that I don't think should really exist as a product. Nonetheless, it is real. I think it is incredibly dangerous, but this is another company that raised $7.5 million in the finance world. So let me see if I can pull up this clip because it did go viral last night. Okay, so here it is. I'm very curious to see what your reactions will be. But these guys have gamified perpetual options future trading. And this is how they gamified it. So this is the video. As you can see, you can literally click on different targets. And if the price of the coin or whatever futures contract you're trading gets to that target, you will win. So instead of like going 2x long at 37.40 on Ethereum, and then as soon as it gets there, you you make your 2x long, you touch on certain squares, and those squares light up showing the amount of leverage you can take and the amount of money you can win. And then the thing going up and down is the price of the asset, or of the derivative of the asset that you're trading. And if it goes in a certain direction, then you win or lose money. I'm all for democratizing finance. This shit is different. This shit is, now look, is it an innovative idea to get more simplicity to the perpetual futures world, which is a massive market, and a lot of companies are thinking about their strategy to get into it. There's a lot of money that these brokerages can make. Even Robinhood's getting into perpetual futures. Yes, but to gamify it like that almost legitimately makes it a casino. Now, again, there's already a lot of these casinos that exist, like Stake. That's a crypto one based in Australia. I mean, they've gamified crypto trading literally through blackjack and all these other different sort of similar games where the thing goes up, it goes down, you win a certain amount of money if it lands in a certain area. It's just like a UI on top of like the price action to determine how much money you get if you're right or wrong, or if you're long or short. So it's not like this hasn't been done before, but that's been strictly rooted in a certain type of niche of, I wouldn't even call them investors, just pure traders. This thing, if it were to go mainstream, I mean, I don't even know what that would look like. That would be a lot. I mean, imagine that thing that I just showed you became as mainstream as prediction markets. It's pretty easy to say, hey, I think the Lakers are going to win. I'm going to bet 50 cents on this Lakers contract. And that's why you have a lot of adoption on the prediction markets. If you had something like that for perpetual futures that went truly viral, I mean, that would be pretty crazy. So now when I show videos like that, you have a lot of people saying, well, that's the top, which I understand, I get. The question simply becomes, how much momentum do products like that get? And again, part of the reason why Bitcoin got hit this morning is because one could argue there's so much leverage in the system, not exactly because of that product, but because of the risk appetite that product is obviously leaning towards. And that level of risk appetite, it got chopped off today as Bitcoin is well below 100,000. Is that bearish or bullish? I mean, long term, that's probably bullish. You get that leverage out of the system. It's easier for these assets to just have more room to move on and keep running. So I don't think that's too crazy, but that's what you got going on right there. Netflix is down because they are potentially acquiring Warner Brothers. There's a couple reports that is going to lead to antitrust concerns. And that's why you're seeing Netflix take a 3% hit right here. We got Dan Niles on CNBC. Let's see how he's thinking. We had Dan Ives, who was more bullish. This is Mr. Dan Niles and his take on the markets.
Is called into question. And so that's the biggest problem, because this gets us to point number 2, which is the other big driver is obviously AI. But within that, there's some companies that need to raise a lot of debt today to fund revenues they hope will show up in the future. And so if you've got that easy money going away, that calls a lot of that into question. And having companies like OpenAI saying, hey, talking about a backstop from the government, that makes people then finally go, well, can a company that's going to exit the year at 20 billion in revenue run rate fund 1.4 trillion in commitments that they have out there? The answer is, in my mind, is obviously no, but it makes you think a little bit more about, can all of these companies win in AI? And history has shown that that's just not the way it works, right? In e-commerce, you've got one guy, Amazon, and in search, you got one guy, that's Google. In streaming, you've got one guy, that's Netflix. And so I think to think all of these guys are going to win just doesn't fit with what's happened with tech in the past, which then makes you go, who's exposed to whom and who's the best position when you come out.
Right. Dan, you used to cover chips. I remember it was a while ago, but it did happen. You know well sort of the accounting, the lifespan accounting of these tools, these products. Part of the skeptics' argument now is that the depreciation schedules don't make sense. Technology will improve. You understate depreciation, you're essentially overstating earnings. Is that a material discussion right now or not?
Yeah, it's absolutely material. And I've commented on this in the past. If you look at the big hyperscalers, they've all been extending over the last several years the depreciation life. Now ask yourself, does that make any sense to you? Because during the last few years, right, I think we've all heard of this thing called AI, right? Jensen at NVIDIA, the CEO of NVIDIA, has come out and said, we're going to introduce a new chip every year, which will make the old chip somewhat obsolete. So we heard about ChatGPT at the end of 2022. And so to me, to have companies extending their depreciation lives at the same time, you've got the pace of introductions for these chips coming down to 1 year, that obviously doesn't make sense. And to Amazon's credit, they
there is a retort to this that we'll talk about in a second around this whole depreciation argument.
Actually took it down a little bit a couple of quarters ago. And so this is, again, something that brings me to the whole point of you've got to start differentiating between the different companies, because there's a big difference between an Amazon and a Google that can fund all of this internally with cash flow and have money left over, versus others that may need to go hit the debt markets to fund, their infrastructure build outs, but they got to hope that OpenAI comes up with 1.4 trillion over the next several years to get there.
So who, can you just name, who are you worried about?
Well, I mean, I think What I would say is let me focus on the ones I'm not worried about. I think Anthropic, right? Unlike OpenAI, which has got obviously they've projected losses all the way through 2029. Anthropic isn't anticipating to turn profitable in 2026, so next year, and their revenues are expected to go from 1 billion at the beginning of this last year, exiting the year at 9 billion, revenues doubling next year. So if you look at that and you say, hey, Amazon hosts them, Google hosts them, they should be in good shape. You know, I look at Microsoft and I go, they've obviously got a big relationship. I'm not as worried about them because I think they're going to be one of the big winners, because in corporate AI, they and Oracle have the best, you know, products, in the sense that everybody's got Microsoft Office and 60% of the world's databases are Oracle. But you look at Oracle and how much they have to borrow, clearly that's been at the epicenter of all of this, where when Oracle reported on September 9th, the stock went up 36%, right? The next day. The stock is now about 10% lower, I know it's moving around, than where it was when they announced that monster quarter with 455 billion in RPO, with OpenAI at 300 billion of that. But does it make sense that that stock is 10% lower than when they announced that big deal? While semiconductors, which by the way, they're going to have to get bought, right? If you're going to fund all of this, the semiconductor index is 15% higher than where it was on September 9th. So I think there's going to be some more, you know, uniformity where people go, well, if Oracle can't pay for this, then clearly the semiconductor stocks are too high, or Oracle's a screaming buy, given it's lower by 10% than where it was on September 9th. So I think there's going to be a lot.
I think that's a fair point. And then obviously that begs the question on like, what is Oracle's growth trajectory in relationship to the stock price decline from that earnings report? But that is something that investors are going to have to figure out. The $40 billion debt is probably why it's trading at 10% lower, given AMD and NVIDIA aren't taking that type of debt. Here is what ticker symbol you said yesterday about depreciation. I'm going to link his video right here. Again, good friend of the channel, but he had a take on depreciation that I thought made some sense, and is why the hyperscalers are not showing the type of depreciation that someone like Michael Burry says they have to show, and kind of accusing them of accounting fraud.
Depreciation of their assets by saying that AI chips will have longer useful lifespans, so that they can spread their depreciation costs out over longer periods of time to boost their earnings. By his estimates, this accounting tactic would understate depreciation costs by about $176 billion across the industry, and companies like Meta Platforms and Oracle could be overstating their profits by 21 to 27% respectively. Look, I'm not going to sit here and pretend that I'm smarter than Michael Burry, but if you've been watching this channel for a while, you might remember when I covered something called TensorRT LLM. Don't worry, I'll break it down for you. Back in 2023, NVIDIA came out with an open source software package called TensorRT LLM, which literally doubled the inference performance for large language models running on NVIDIA's GPUs. That meant the hundreds of thousands of Hopper H100 GPUs bought by these same exact companies, Amazon, Microsoft, Google, and Meta Platforms, got twice as good at running large language models overnight thanks to this software update. But NVIDIA's hardware and software ecosystems are designed to be backward compatible, so the same software package also works on the Ampere A100s, which predate the H100s, and it also works on their current generation of Blackwell GPUs. In my opinion, this is a clear example of older chips having their useful lifespan extended by a software update, which means they can reasonably be depreciated over longer periods of time. For example, if we're following Moore's law, which says that computer chips get roughly 2 times better every 2 years, and TensorRT LLM just made the H100s twice as good at inference, then that should extend their useful lifespan by 2 years for depreciation purposes. And of course, NVIDIA has many more software packages that focus on improving the AI performance of their chips.
So again, it might not be the most perfect argument or against the argument around depreciation from an accounting perspective, but the simple kind of core basic argument is that if the chips get better based on the software updates from NVIDIA, and there's historical evidence that that's the case. By the way, S&P new highs of the day, 672.80, then that means the life cycle of using the chips should extend, which means so should the depreciation cycle, which also means like the accounting fraud that Michael Burry says is overestimating earnings. It just might be completely inaccurate if that's the case. So I think there is an argument against depreciation if people want to get super hung up on that. 672.60 on the S&P, Ethereum 3,200. We are not giving up the green yet, folks. We've gone back and forth, but it's not like S&P has given out in the 670s. Robinhood well above 125 right here. Palantir trying to get to 175. Google, for some reason, hasn't fully gone green yet. Nvidia is pushing 189. Oh, no, it did. It hit 189.50. Trying to push for 190 here as it goes green. CoreWeave officially green. It was down 5. Nebius, are we red? We are still down about 2% on Nebius. Wow, AMD 250. AMD was 234 in the pre-markets. Okay, so I mean, look, and going to Dan Niles' point around CapEx spend, I mean, it's the same argument, right? Like either you believe OpenAI is going to come up with the money or you don't. And if you don't, then you position appropriately. If you do, because you think they are a critical infrastructure in this AI ecosystem and that there will be an ROI, then that's why you stay long. And even if they don't, this is kind of the conversation we were having last night. If OpenAI really does fail, it's definitely going to hurt a lot of the chip plays, but the Max 7 are going to survive because the Max 7 have very large moats and business models. So like, will that take down the market if the chip plays get hit? Yes. Will the sentiment be bad if, OpenAI fails or something? Yes. Does that completely delegitimize everything Google's done with Gemini? No. Definitely doesn't hurt what Anthropic's done with Cloud. With Claude. So OpenAI is a linchpin, but I don't know if it is the single linchpin to the entirety of the stock market. And again, this is assuming they fail. I don't think OpenAI is going to fail. Maybe they don't spend $1 trillion on CapEx, but they probably don't fail. Speaking of OpenAI, this is what ChatGPT launched yesterday in terms of new products. Group chats in ChatGPT are now piloting in Japan, New Zealand, and South Korea and Taiwan, a new way to collaborate with friends, family, or coworkers and ChatGPT in the same conversation. They're literally replacing iMessage and Facebook Messenger and WhatsApp at the same time. Now, will they be successful at this? I don't know. But you can obviously see what they're trying to do. They are trying to go after everything from an AI perspective. And so if you have group chats with ChatGPT as the foundation of it with your friends as a fully integrated ecosystem, which I don't know why Apple couldn't easily replace this with iMessage and Gemini. Like, I feel like there's a lot of different ways you can navigate. But like the fact that they're trying to do this to strengthen the moat of how many times people will be using their LLMs, it goes to show more and more products that are trying to come out. Now, I don't know if I would really be in a group chat with my friends on ChatGPT, but nonetheless, these are different ideas that they're going for. 249 right here on AMD. I think this is useless. What is the value? I don't know. Again, like I haven't really experienced a product with an AI message native platform, but they're trying stuff, right? And I think there's going to be a lot of experimentation over the coming years, and some will work, some will not. But whatever the stuff that does work, you're going to need a lot more compute to be able to make sense of it. Wow, S&P 673. She's really trying to hold the 670s, not just teeter above it. Group chats with your AI friends. When is OpenAI going public? I would say latest 2028. I think 2027 there's actually a good shot, but I think probably when they cross 100 billion in revenue, they'd feel comfortable going public because they probably go public at $1 trillion. So 10 times revenue, I think, is what they're aiming for, which might take 2 years to get there. Nvidia, are we trying to push 190? Wow, 189.34. Full on V shape on the day for now, middle of the day, but Bull stepped in. Bull stepped in as we go green. It's pretty freaking incredible. Let's finish off with Dan Niles, and then we'll keep going from there.
More uniformity coming out of this versus right now where you've got these big moves that don't make sense if this company doesn't work well, but semis will be fine.
Right. So it sounds like you're worried more about valuations in the chips names and maybe the private OpenAI. because you drew a line and called out Anthropic for profitability. We don't really know when that's going to happen for OpenAI.
Well, no, we do. They've told us, right, that they're going to lose money through 2029, and they're only going to get profitable fiscal 30. That's a lifetime from now for
That's
tech.
what I mean. That's what I mean.
Yeah. Yeah. And so I think every company that's exposed to them, you've got to sit there and question that a little bit more, because I personally believe that Google's going to kill them in consumer. Why? Because Google is a cash flow machine with more data than anyone in the world because of YouTube to train their models. They're going to win in consumer. So that cuts that market off for OpenAI, which, by the way, if you remember, like I always focus on what companies do, not what they say. And in August, OpenAI was saying, oh, you know, we're glad and we're proud that we don't have to have any erotica on the platform, taking a shot at, you know, XAI. Then they come out 2 months later and they say, well, we're going to allow erotica on the platform at the end of the year. That speaks to the problems. And they know that that's not going to be liked by a lot of investors. It's going to make going public that much harder. But so why are they doing that? Because they're having trouble monetizing on the consumer side. So I think, as I said earlier, you've ended up with 1 or 2 winners at most in the internet era in different verticals. And I think when I look at consumer, Google, and then, you know, TikTok in China, they're going to be the big winners because of all that data they have to train on. I think Microsoft and Oracle, because of their dominant positions in corporate, they should end up being the winners there. And then it's going to get a lot tougher. And that's already 3 guys. It's going to get a lot tougher for everyone else, I think, because at some point, you may have these fantastical forecasts, and I'm sure we all remember those in 2000, but you've got to show you can generate money from all of this. And I think that's where it gets trickier when 5 billion consumers are used to going on to putting something into their search bar and getting an answer for free.
Right. Finally, Dan, the rotation, XLV, 14% in 3 months. I mean, do some of these movements of tech money into
Saudi Arabia's public investment fund sells all of their NVIDIA, all of their UNH, all of their Mercado Libre. All of their NVIDIA, all of their Meli, and all of their UNH. They didn't buy anything new, but those were the 3 sells that they had.
old economy names? Makes sense?
I mean, it makes sense in the following way. I mean, I've been talking about for a while the valuations are obviously extremely high, but valuations really don't matter until they do. And that's kind of what concerns me. If the Fed is actually going to, you know, whether they cut or not, they're going on pause for the next one, right? So I think we all can probably agree on that based on, you know, up to 4 or 5 people that look like they could potentially not vote for a cut or dissent if there is a cut. And so then you look at the sectors that are sort of more defensive and you go, yeah, consumer staples, the SNAP benefits are coming back with the government reopened. That should really help sectors like that. You know, healthcare, which had gotten beaten up obviously earlier, that's a little bit more defensive. So some of the less speculative areas of the market, like nobody's not buying toothpaste and nobody's not.
Which explains the rotation to defensives. I mean, and that's what we've seen happen throughout the entire week. NVIDIA 190. 190, S&P 674. Wow. 0.3% up on the day for the S&P. This thing was at 663 an hour and a half ago. Complete pivot. NVIDIA 190, Hoodie 125, Palantir 176. This market, time and time again, has said that we are not easily going down without a fight. And when stocks get cheap enough relative to their earnings, which many of these names did in the pre-market, including in NVIDIA, one could argue this was one of the cheapest names. When you look at other names compared to their earnings, I mean, did buyers step in? Dude. All right, now everyone can have a good lunch. Now everyone can, or if you're about to go to sleep, you can have. Who's about to go to sleep in like the next hour? Who? All right, put in the chat if you're about to go to sleep, if you're about to get lunch, or if you're about to eat breakfast. You can have a bit more of a relaxing, at least next hour before we get whipsawed back down if that happens. What is sleep? Okay, a lot of people are saying they're about to go to sleep. Well, you can maybe not have any nightmares going to sleep. Dude, that's the worst thing for some of the international folks, right? Like, you got to go to sleep, but you see the market crashing. Like, my uncle does that all the time. He's like, all right, dude, I got to sleep. Markets are okay. Make sure when I wake up, this shit doesn't go the opposite direction. And I was like, I'll try. 410 right there on Tesla. Wow. Complete reversal from the pre-markets. Oh, yeah, it's only 8:30 in California on the West Coast, dude. It's still super early on the West Coast. Currently baking and had a later breakfast, so no lunch. I don't think I've had breakfast on a weekday in 3 years. Like, legit eating in the morning before the show, I don't think I've done that in 3 years. I just like, it's hard to eat and then talk for 4 hours. But lunch might not be in the worst position today. Palantir 176, hoodie 125. Wow, S&P's moving past 674. 674.80. Hood 126. Where's Rocket Lab? Are we back to 50? Rocket Lab, not 50 yet, but 47. I only get out of bed for breakfast. Well, I get out of bed because I tend to wake up a bit more early. I got to get ready for the show, and I somehow manage to be late every day still. But it's hard for me to eat breakfast. You are seeing these names go again. Now, I just want to say, if we still end red for the day, let's say we end at 669, which would be way better than where we were in the pre-markets. That's a win. That is a win. As much as it's going to suck, it is a win. The goal is to not be at the Friday lows from last week, which we were less than 0.5% away of getting to in the morning. So it is a win if we see any level of momentum around 669, 670. Anything above that is a cherry on top. Anything above that is a cherry on top. Ondas, wow, 18%. Look at that move. Tesla from 382 to 410. And then Grab from 530 to 552. Is Bitcoin making any move to help? Bitcoin 96.8. All right, Bitcoin's up from 94. Bitcoin's up from 94. BMNR obviously not moving like crazy, even though it is up from the lows because Ethereum not moving that high above 32. But you do have the bleeding that's starting to stop. NVIDIA now over 190 as well, which is great to see. All right, folks, I think that's it for the market open. I mean, we'll be back on the close. We'll see what we got going on. We got a startup that'll be on the close, so we'll do an interview with them and get to see kind of what they're doing in the crypto space. I think Steve will be on. He should be able to be on, so we should get him on as well. And we'll see how this turns out. I do just want to say I don't fully think we're out of the woods. I mean, again, it's I think too naive to say that the market won't whipsaw this down for whatever reason they want, but it's a very healthy move up. I mean, for NVIDIA to go red, it has to lose 2%, and then for it to go anywhere near where it was in the pre-market, it has to lose another 2%. There's about a 4% reversal that could happen, but it has to like really be a lot of selling pressure 2.5 hours into the market open for that to take place, which seems like it might not have as easy of a trajectory. Not bad, folks. Not bad. All of us here just staring at these candles go up and down, trying to see if we can have a shot at holding on to this bull market end of year. And then you got this Trump tweet that just made a complete pivot on the Epstein thing. I mean, again, I don't know if the Trump tweet the market reacted to, but as that came out, that's when we broke above 670. It could have just been a coincidence. But the pivot of what he's thinking in terms of this investigation, ultimately the market's going to have to figure out how to react to that long term and the implications of that. but this is just a crazy, crazy market to cover every day with a lot of different twists and turns. There you go. Test right there at 408. E Penny, thank you for the super chat. Hi, Matt. Thanks again for your stream. What's your take on BM&R and the administration change? I think the administration is super bullish for BM&R in terms of the Trump administration and the policies that they're passing. In terms of these new CEOs and the executive directors that BitMine put on the board today, I have no clue because I did not look into them. I would imagine Tom Lee has relatively good insight on people, and that's why he's been able to build Fundstrat. So I would have to research some of the folks that he appointed onto the board, but yeah, I just really have not looked at any of those people yet. Siege, thank you for the $20 super chat, man. Appreciate you. Thank you for being here. Paul Chen, thank you for becoming a channel member as well. And thank you guys for being here on the day. All right, word of the day. Let's end off the market open with a correct pronunciation of the word of the day. And that'll lead us into the close. Then if we can end green, it would be, it'll be funny. If we end at around this level, 672, 674, that's basically where we were last Friday, which means if you had just not looked at your portfolio for a week, nothing would have happened. If we end at this level, we are where we are on Friday. And remember how good we felt last Friday when we had the V shape from the shutdown headline? It's basically the same thing, except there was no headline. It was just buyer stepping in. Okay, word of the day. Okay, I have two ways I want to say this. I'm not looking at the pronunciation. I'm just looking at how I would say it. Apodictic. That's how you say it. I don't even want to look at the comments, given the middle of that word. Describe something that is clearly established, undeniably true, or logically certain, the kind of statement that can't be disputed. Why did ChatGPT have to pick this type of freaking word, dude? Why did, first sagacious, now this shit?
Apodictic.
Okay, so I got the A wrong on this. I said ah versus eh. That's why English is stupid. But apodictic, that is the word. Apodictic.
Apodictic.
Something that is clearly established, undeniably true, or logically certain, the kind of statement that can't be disputed. His argument wasn't just convincing, it was apodictic, leaving no room for rebuttal. I think I will use this word. I mean, again, I think the comparisons to the dot-com bubble are not apodictic. It's very difficult to establish something that's super logical to say we are in a dot-com type of scenario. Use it with your grinder. ChatGPT watches this show. These freaking words, dude. Sagacious, apodictic. All right, that's it. That's what we got. Thank you all for being here. It's been a super, super crazy day, super volatile. One thing I also want to say is give yourself some grace. On days like this and on weeks like this, give yourself some grace. No human is perfect. It's never easy to time the top or bottom. You might have bought a stock that went down 10% this week. You might have sold a stock before it V-shaped back up 5%. You're all human at the end of the day. No one's perfect. Buffett, Ackman, Tepper, these guys also make mistakes as well. And you're competing against very sophisticated algorithms, which is why the best way to win is to DCA and buy the companies that you believe in and not sell them on the days that they take a big dip, because you want to continue holding on to those names for a long time. So on weeks like this, as tough and as annoying it is, sometimes, you feel like you're just getting punched by the market. Just remember a couple months ago, you felt like you were punching the market. And so it's a fight back and forth. But if you are in a solid company that you believe in, and you've done your own due diligence, and you're not super leveraged or heavily on margin, you're going to survive. You're going to be okay. The world is not going to fall apart. And going back to the beginning of the show, and for those that didn't hear the beginning of the show, if you want to go back to those first 30 minutes, we really went in depth on, are these structural problems we're seeing in the market, aka foundational paradigmatic changes for how investors should be thinking about allocating capital, or are they idiosyncratic anomalies that are of the moment but are not fundamental changes in how you should be thinking of the current state of the stock market. And if it's not structural, not saying it can't become structural, but at the moment, if it's not, then it's not something to be the most afraid of. And you got to give yourself some grace on weeks like this. All right, that's it. Thank you, everybody. Appreciate you all. We'll be back on the market close, and I will see you guys later throughout the day, and we'll see how this market ends up turning out. Thank you, everybody. Love you all. Appreciate you guys. I'll see you on the market close. Bye, everybody. Have a good one.